Saying that there is traction in the UK planning system amid reforms. That links to the politics of yesterday, of course, and they say they're on track to deliver their profit guidance for 25 and 26, Guy.
Halifax house data this morning a little higher. Skincare matters. Two things you need to know. Let's talk about this market open. Let's figure out what is happening here. Let's watch the numbers and come through and see what we're getting. FTSE 100 really struggling to gain a little bit of traction this morning. I think we've got a bit to wait for as we work our way through the day. We've got to watch what happens with that payroll number. IBEX is down a little bit. So again, not a great deal of movement up front for the European session. The 600 is up by less than 1/10 of 1%. To Chris' point, we'll see what happens with the CAC Caron today. Does the relief kind of story that maybe we're seeing in markets in France continue today? We'll watch that one very carefully. You've seen disappointing German data as well. Keep an eye on the industrial story. What is happening there may signal a recession potentially for Germany. The CAC is open. It's up a little bit. We wait for the DAX. We wait for the SMI. What's going on below the surface? Let's find out what that story looks like, Critty.
Well, Guy, you are seeing green on the screen when it comes to the French story, at least in terms of index contributors. Your biggest index contributor to the upside this morning is actually Airbus, followed by several other French stocks. I'm looking at L'Oreal, I'm looking at LVMH, among several others. They're your top three index contributors, Anna, this morning. The rest of the market broadly lower.
Yes, and I'm intrigued by this Puig story. I was just looking at this, and consumer products and services broadly is going higher.
Yeah.
But Puig brand's actually an area of weakness, down by 3.9%. This on the back of, and Citi calling this right, that this would weigh on the stock today after they voluntarily withdrew these selected batches of this setting spray. I didn't realise setting spray is such a big deal, but, you know, clearly the Citi analysts know more than I do about face products.
Your hair's clearly not as frizzy as mine and Guy's, obviously. I think Guy's the prime audience for this, right, Guy?
Skincare matters. Alex Steele always told me that. You got to take this stuff seriously.
Can I start with just saying hairspray and skincare are two different things?
Yeah, but this is an airbrush flawless setting spray, so I'm assuming this goes on your face.
Oh, fair enough, fair enough.
There you go.
To Guy's point.
We're learning new things here this morning. Back to the markets. Yeah, I think it's fascinating that we are seeing French. So the more international businesses, think about Airbus. So Airbus is a company that manufactures largely in euros and sells in dollars. Aeroplanes are priced in dollars. This is a global business. Are we starting to see maybe the market looking at what the French situation tells us about the long-term trajectory of some of these businesses, and maybe it doesn't? And I think that's the narrative. We spoke earlier this week about babies and bathwater. Are we seeing maybe some of the babies being put back in the bathwater, and some of the winners globally? Airbus, I look at what it's doing at the moment, huge order backlog, Boeing in trouble. Maybe that's a business that actually has a non-French related narrative to it, and maybe that's why you're seeing maybe some of the interest coming back into those kinds of stocks. I can only speculate on that, but it feels logical.
It does feel logical. I will say, though, if we're looking for signs of stress, and this is a conversation we've had all week as we continue to look at the French stock market with the political overhang, as Anna had mentioned, continue to rally, there are signs of stress. You have to just look under the surface. So, for example, in today's trade, you are still looking at the banks, the French banks, becoming the underperformers. So perhaps that's the sector story that matters from here on out, to your point. Let's get another perspective here. Aliki Rufiak, multi-asset portfolio manager over at Rebecca, joins us around the table. Aliki, pleasure to have you on the program. Good morning. Walk us through, perhaps, your thoughts on the French story. We've seen so much underperformance in the CAC Caron, and we've seen so much underperformance when it comes to that bond market. Is this the moment to kind of bottom feed or pick your winners, as Guy kind of mentioned? How do you think about it?
So to a certain extent, what we've already seen in the French market has been already priced in. The French stock market is trading at a discount relative to the European market. But also, if we take a little bit of a more long-term perspective, because at the moment there is a lot of political uncertainty in Europe, not only in France, but the situation in Germany as well, with the strikes and elections coming up next year, is a cause for concern. So for now, I think a more cautious approach is warranted. However, looking a little bit further in 2025, there is significant upside potential for this market, and the reason being valuation. Valuation is pretty attractive, especially relative to the US. At the moment, Europe is trading at a significant discount of more than 40% relative to US equities, but we really need to see some catalysts playing out over the next year for this value to be unlocked.
Well, I think this is kind of a journalist's dream to say, and I think I'm going to jinx it as I say it, but I think the first 60 days of 2025, we're going to kind of know the two big headlines in this part of the world. It'll be, of course, the German federal election. I'll throw France in there in terms of European kind of political chaos. And then it's going to be what happens in Donald Trump's first days in office. I'm curious which of those things matters more for the European market in terms of trading, maybe first quarter 2025.
I think we're going to see a lot of volatility, which could potentially create buying opportunities during the first quarter. On the one front, what's are going to be the announcements in terms of the US, particularly on the tariffs front. This, to a certain extent, has been already priced in. So politically, if we see a result that would lead to stabilization in terms of the landscape in Germany, that would be a very strong catalyst for European assets to perform.
That's interesting. So maybe our focus should be maybe on Germany rather than all on France right now. Let me ask you about the dollar, though, because you talked about the Trump trades and what they mean. I know that you or the team that you work with has been talking about how the dollar does look overvalued and at risk. Do you see a catalyst for changing that, though?
The catalyst would be when asset markets are going to price in the relevant factors that are going to affect the global geopolitical landscape over the first quarter of the year. And what I mean by that is we've already expecting tax cuts in the US, but also tariffs. Deregulation is a big factor that is going to play out, and also immigration curbs. So once all these factors are priced in, and also once we have visibility in terms of the degree and timing of implementation, I think then we would see some moves on the dollar, particularly if it's more positive for other asset markets. We expect the dollar to weaken.
And is there anything then that picks the euro up? I mean, is that a catalyst for the euro as well?
That's quite an interesting question, because at the moment, the only conviction that we have within our tactical asset allocation outlook is getting exposure to the yen. That is a little bit a kind of outsider in terms of how the currency is reacting. We've seen recently, yesterday, it strengthened at the back of announcement of a rise in Japan wages, and there we also see in Japan a policy that is more towards hiking rates, and this would support potentially a stronger yen. However, having said that, we do look at the yen relative more to euro and the Swiss franc, where we find that there the funding costs are better at this point in time to capitalize on this opportunity.
What's going to outperform the S&P next year?
That's, I think, from a one-year perspective, and as we've already written on our one-year Obico outlook, there are two areas where there is a lot of potential to unlock value. One is Europe, and the other one is emerging markets. And if I look at emerging markets as it stands now...
Yep. Do you think Europe's going to outperform the S&P next year? Is that possible? I can look at the numbers this year. The DAX has done relatively well, up 21%, and this is currency adjusted. This is not currency adjusted. The S&P is up 27%. If I currency adjust that, that's 32 and 21. Does that do I get a mean reversion in any of these stories? US outperformance this year, underperformance elsewhere. Do we see that gap closing?
I think as I said previously, we need to see some catalysts for this value to be unlocked. And Europe, for example, if we see a reversal in terms of underspending trend that has been going on in Europe, and this is going to be a very significant catalyst. So what we're looking there is improvement in consumer sentiment, but also improvement in consumer spending, which is currently lagging the real wage growth. So the picture there is more constructive, but we need to see the catalyst happening. The other point to mention in Europe is currently the saving rates is at post-COVID high, so we have 20% saving ratio. So if we start to see saving rates going down, this would also be beneficiary to consumer spending. And I think what the market doesn't expect, events like, for example, a truce between Ukraine and Russia could be another catalyst that would lead to Europe outperformance.
So, Aliki, to Guy's point, Europe has outperformed the United States in very small, short periods of cyclicality, right? When you start to see the cyclical part of the expansionary cycle, that's when Europe outperforms. But I'm curious what you need to get there. What signs do you need from Europe to get there? You mentioned the consumer savings rate. Is it something that could show up in the data? Do you need hiring? What, to you, signals the start of a expansionary cycle in Europe?
I think what would make consumers spend more is a more stable environment. So we talked about politics. Politics at the moment induce a lot of uncertainty. And on the other side, we are seeing a lot of weakness on the manufacturing sector. So if those two themes, we see improvement going into 2025, I think then sentiment is likely to improve and would support consumer spending.
Aliki, great to see you. Thank you very much indeed for joining us this Friday morning. Very nice. Aliki Rufiak, Rebecca, multi-asset portfolio manager. Let's take a look at what the core six looks like this morning. This is the picture we find ourselves with in Europe. Lots of red to the right of the screen. Ferrari, ASML, Schneider, Nestle, all seeing losses. But it was interesting, as Critty was pointing out, you are seeing some of the big French names this morning, maybe outperforming a little bit. Schneider's an exception, but LVMH is up. Airbus is having a really solid session. Are we starting to maybe become a little bit more selective in the stocks that we're watching in France? Let's check some of the other individual names, figure out what is happening there. Joe, over to you.
So we are seeing a big drop in Puig, the owner of Charlotte Tilbury, over in Madrid. Now, remember, the company has said that they are withdrawing one of their makeup sprays due to a quality issue. They say there is no health concern, but that is the biggest decliner on the entire stocks Europe 600 today, and also the biggest drop for the shares in 3 months. Now, this stock IPO'd at 24.50 back in May. We're down to 18.35. It's already down about 25% since that IPO. One of the biggest IPOs in Europe this year, and really hit hard by that Charlotte Tilbury withdrawal for Puig over in Madrid today. Then, in terms of the insurers, we've got some upside as expected in Direct Line. Now, the latest bid at 275, so we're still around 20 pence or so below where it is priced in terms of that agreed deal. Potentially a bit of execution risk on that one, but the stock coming up almost 8%. Aviva holding pretty steady in terms of the acquiring company holding firm at the moment. Then in terms of Barclay Group, now the sales looked okay, but we're still coming back down. We also had the Halifax data that Guy mentioned as well. That looked pretty solid, around a 1% gain in the latest month, but still not seeing too much of a boost on that. Potentially more to read into that statement on there. Then in terms of the athletic leisure stocks, Lululemon was up 9% in the US yesterday, citing strength in mostly its international business. The US looked a little bit weak in terms of some of their sales. We're seeing a little bit of a gain in Puma today, up almost 1%, but the rest of them pretty steady at the moment. Then in terms of rating changes, the big one in luxury was Goldman saying they like Moncler. This has actually been one of the better performers in the sector, and Goldman thinks there's still value in this stock. There was a speculation around Burberry. That kind of seems to have faded away in terms of reports on a potential deal there. And finally, BMW, a second buy this week after UBS upgraded it. Now Jefferies switches preference. They go from BMW to BMW from Mercedes, preferring BMW due to its cash flow outlook. And that one is up 0.9% in Germany this morning.
Okay, Joe, thank you. Joe Easton with the movers. And the CAC currency is outperforming a little bit, but nothing's moving all that much this morning, is it? I mean, we've got the CAC up 0.2%. The FTSE 100 entirely flat. US futures You really can't see much movement there. We do see, whether it proves to be a big event or not, payrolls is on the horizon, and that could matter for December, as Mark was telling us earlier.
Can you tell it's Friday?
Yeah, so I guess the question you have to ask then if you are looking at this as a short-term story, what gets squeezed around this? I guess is the question that we should probably ask ourselves.
Around payrolls.
Yeah, what are we out of position on in terms of a strong number? What pushes us higher? If you look at the whisper number, you're potentially going higher.
And it doesn't seem as if the market is betting on loads and loads of rate cuts, and that's really underpinning the market narrative at the moment. So even if we got a terrible number and it changed expectations, or even, sorry, if we got a really good one and it changed expectations about the number of cuts we get, it doesn't feel like that is top of mind for investors as we go into 2025. Yes, it's there in the backstory, but what President-elect Trump does next seems to be a bigger question.
Yeah, and I think your point about the numbers is crucial here in that if you look at the months prior to the 12,000, it's like 135, 156. So is 220, does the math work here that 220 is the estimate? Do you just divide that in two to account for both months? Like, is that how you think about it? I don't know.
Going back to Mark's point, whatever you want, you will generally see. So what does the market want from this number? Because that will be the narrative that ultimately comes out of it. Is the initial narrative the right one? Normally not. So you've got to figure that one out as well.
That's why you go to the pub, he said.
That's why you go to the pub.
To consider
which is generally a good piece of advice anyway. And then you think about what the positioning setup is. The dollar's quite strong right now. Is that where you therefore potentially get the euro moving around quite a lot on the back of this number?
He is geographically well positioned for this strategy, isn't he, being in Singapore? Coming up on the programme, we'll get back to some of the global politics. South Korea's president cancels a visit to Parliament after opposition lawmakers, they planned to block him from the building. We saw them lining up to do that a little bit earlier on. We'll be live in Seoul with the latest. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome back. Watching the opening trade. We are 18 minutes into the European equity market session. Generally, most markets this morning are going nowhere in a hurry. The exception appears to be actually the CAC 40, where we're actually seeing some action this morning. You've got that market up by 0.3%. What is also interesting is that volume is significantly higher in the CAC 40 than it is in most other markets, which are actually a little soft today as we await the payroll number coming a little bit later on. So a little bit of activity this Friday as maybe the situation begins to stabilise in France. Political instability is certainly a theme in France at the moment. It's also a theme in South Korea, where the country's president, Yoon Suk-yeol, has cancelled a visit to Parliament, where he faces impeachment proceedings for a failed attempt to impose martial law. There are reports that opposition lawmakers are planning to block Yoon from entering the building. We saw evidence of that a little bit earlier on. Bloomberg Sherry Ann joins us now from the National Assembly. Sherry, walk us through the latest. What does it look like now?
Perhaps a good idea not to come to the National Assembly, given what you can see happening behind me. Safety concerns are rampant right now. We have dozens of protesters out in force. You have crowds just extending behind me, demanding the resignation of President Yoon Suk-yeol. I have a demonstrator right now with me who's in fact a part of a small opposition party. Let me ask her why she's out today. 오늘 어떤 목표로 나오셨어요?
네, 국민에게 총을 들이댄 윤석열을 체포하기 위해서 나왔습니다.
We want to arrest President Yoon Suk-yeol, who's actually put a gun to the citizens' heads here in South Korea. 언제까지 계실 거예요? Until when will you be here?
윤석열 탄핵될 때까지 멈추지 않고 여기 있을 겁니다.
She will not stop. She will continue to come here every day until he is impeached. 탄핵이 안 된다면, if he's not impeached?
그럴 일은 없습니다. 반드시 탄핵될 거고 윤석열 체포될 때까지 우리 국민들은 싸울 겁니다. 국민이 반드시 이깁니다.
That will not happen. He will be impeached and the citizens will win this battle, especially when it comes to arresting him as well. Thank you so much for being with us. These demonstrations can grow really fast, you guys, because remember the last president that was impeached was back in 2016, facing a crowd of thousands that grew into more than 2 million in just a matter of months. We do have that impeachment vote slated for tomorrow. Whether the ruling party will oppose that impeachment bill is a big question. The ruling party leader has already said that he wants the president to be suspended.
Sherry, a fascinating conversation there. Walk us through the ripple effects here. We know that Yoon's government, Yoon's administration has been one that's been crucial to the defense story in Southeast Asia. Walk us through the ripple effects of this potentially new administration that may come in and what that means for South Korea's relationship with the rest of the world.
The ripple effects will be huge because right now we have a conservative Yoon Suk-yeol administration who's had a friendlier relationship with Japan and really worked through that trilateral cooperation with the Biden administration in order to push back against not only the likes of China but also North Korea. If we do get a new administration, especially coming from the opposition leader Lee Jae-myung, who I spoke to yesterday, he was saying that he was going to do everything that he could. It was just a matter of time that President Yoon Suk-yeol gets impeached. He sounded more dovish when it comes to relations with North Korea, that if not provoked, that things would remain the same. When it comes to Japan, he talked about how meetings just for the sake of meetings are not good. So we will have to wait and see what happens. But right now, the crucial test is what happens on Saturday on that impeachment vote. The opposition parties only need 8 ruling lawmakers to change their vote and actually pass the impeachment bill. If the impeachment bill is passed, it goes to the Constitutional Court. And then if the Constitutional Court upheld that impeachment motion, then an election needs to be triggered within 60 days.
And Sherry, what is the role of the defense ministry, the military at this point? We saw headlines earlier saying that the defense ministry has suspended duties of some officials, and there seem to be questions now about whether some military officials are able to leave the country.
Yes, we have heard reports of the Defense Ministry now suspending duties of some commanders involved in the operations after the martial law was declared. We have seen a new defense minister being appointed by President Yoon Suk-yeol already. That would be South Korea's ambassador to Saudi Arabia. This, of course, as there are allegations now of treason against the defense minister, safety minister, and President Yoon Suk-yeol now facing these allegations that will be investigated thoroughly. Right now, authorities are trying to move. We are still trying to figure out what the next steps will be in terms of who runs the country. But what remains clear is that if President Yoon Suk-yeol's duties are suspended, or if he gets impeached, then a caretaker administration would take over, and that would be led by Prime Minister Han Duck-soo. He is a veteran. He has served in that role of prime minister before under a president that was also impeached. President Yoon Suk-yeol is the third South Korean president to be impeached.
Sherry, thank you very much for joining us. Bloomberg's Sherry Ann in Seoul with the latest there. From Seoul, let's go to the Middle East. The oil beat needs our attention as well. Oil has steadied after OPEC Plus decided to push back the revival of shuttered production by another 3 months. The decision failed to lift sentiment in a market that's expected to suffer from a glut next year. Let's bring in Bloomberg's Jumana Basecha in Dubai. This was widely anticipated. OPEC Plus was expected to make this decision then, Jumana. What takeaways from it?
Yeah, well, as you say, there wasn't that much of an impact on the market because there was an expectation in the market that OPEC Plus would once again delay the decision to start putting back oil barrels to the market, which doesn't seem ready to digest extra barrels. So the impression from the market here is that they have just decided once again to kick the can down the road. And what we found out yesterday is instead of actually bringing back that 2.2 million barrels per day to the market over 12 months from April of next year, they're going to do it over 18 months as well, so a lot more gradual putback. And really, this is a reflection of very weak market fundamentals here coming from some of the downside to demand that exists. Several think tanks, including the IA and even the OPEC group themselves, have downgraded their estimates for demand growth over 2025 several times this year. And what that means is there still is a supply imbalance. According to our own numbers, Bloomberg Economics estimate that that supply glut amounts to about 1 million barrels per day. So if you take into consideration some of the weakness of demand that's coming through from China, plus the potential for further non-OPEC supply to hit the market, what you are seeing here is very clearly OPEC's hands are tied. And many people are saying that even once we get to closer to the next decision, which is, again, in Q1 of next year, they may once again decide to delay, given some of the headwinds that the oil market is facing here.
Jumana, thank you very much indeed. Bloomberg Horizons anchor Jumana Basecha updating us on what is happening with the oil market, which is interesting, considering what we're about to get from the Trump administration as well, and America, potentially even more oil coming onto the market at a time when the market really doesn't need it. OPEC between a rock and a hard place.
Yeah, absolutely. So, well, you know that Trump is a big fan of the oil industry, and drill, baby, drill has been that mantra, hasn't it? And so the extent to which that adds to the glut concerns next year is something we watch closely.
At the same time that the economic sentiment may be slowing as well. We're talking about the U.S. consumer resilience. What happens if we start to see evidence of that fade?
We're going to pull some of the politics threads in just a moment and figure out what is happening. Tests on democracy, it certainly seems to be a narrative at the moment. Pulitzer Prize winning historian Anne Applebaum joining the dots for us next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is the opening trade. We're about 30 minutes into today's session, seeing some very marginal moves everywhere except for the French markets. That's where you're seeing some notable outperformance. The CAC 40 higher by 0.4%, even in the face of some of the political tensions we've seen, of course, across the week. It seems like France going into potentially a technocratic government. The market's not really batting an eye. CAC 40 higher by 0.4%, again, in the face of that political overhang.
Yeah, we saw a lot of stocks getting thrown out, babies being thrown out with bathwater earlier on this week, and maybe we're trying to kind of figure out what we do next. Names like Airbus, L'Oreal doing better as maybe the market reassesses some of the risks around some of those names. It has, though, been, to Critty's point, a week of geopolitical shocks. We've been watching what's been happening in France, but you've seen this lightning advance by Syrian opposition fighters. You've got martial law potentially being declared or not declared in South Korea. You've got anti-government protests in Georgia. This coming Sunday, you've got elections in Romania. Keep an eye on that story. You definitely want to keep an eye on that story because potentially this threatens another country pivoting towards Russia. Is there a link? Can I make a connection? Is this a pre-Trump era in which this chaos is beginning to manifest itself? Or are these just unrelated events? I think a lot of people are trying to figure that question out as we go into this weekend. Let's try and get some answers for you. Anne Applebaum, author of Autocracy Inc., The Dictators That Want to Run the World, joins us now from Poland. Anne, good morning. There's a lot going on.
Good morning.
Are these unrelated events? Are these related events? Is there a theme that I can draw between the geopolitical tensions that I'm seeing in so many parts of the world right now?
I think there's some of them are related, and there are themes that you can see. One of them is the theme of Russian influence and Russian attempt to persuade parts of the former Soviet empire, parts of the Soviet bloc, to realign with them against the United States, against Europe, against the democratic world. And so their efforts in Georgia, the Georgian ruling party is closely aligned with Russia, has just declared that it will end Georgia's plan to join the European Union. The massive protests you've seen on the street are disappointed Georgians who wanted their country to go in a different direction. You see something similar happening in Romania, where a candidate whose popularity surged after enormous amounts of money were secretly invested on his behalf on TikTok, which is, of course, a Chinese-owned app, the money is thought to come from Russia, help to boost his campaign. He's also somebody who would take Romania in a different direction, maybe away from NATO, maybe away from supporting the Ukrainian effort to repel the Russian invasion. So you can see in quite a lot of countries the Russian attempt to package its influence and to spread its influence continues. I mean, in Syria, of course, you have something the opposite. You see an armed group with backing from outsiders also pushing back against the Russian-Iranian-backed regime there. So, in a way, that's the forces of what I've called in my book Autocracy Inc., the countries who are seeking to help one another maintain dictatorships. You see them, under attack.
History sometimes provides a useful template to understand current situations, and I'm wondering if there's a period in history that stands out as maybe an indication of kind of what we're going through and therefore what we may go through in the future. A lot of people I'm talking to at the moment are drawing parallels with the 1930s or with the 1970s. And the question that maybe comes out of that is, are we going to end up seeing a sort of Neville Chamberlain situation where we end up appeasing a dictator, or are we going to end up seeing a kind of Ronald Reagan where we end up pushing back a dictator? What do you think happens next?
So first of all, I mean, be careful with historical analogies. Nothing is precise. But it is true that we see a group of countries with very different ideologies actually beginning to work together in the way that perhaps the Axis worked together in the 1930s. It's a little bit different from the 1970s. But yes, the challenges facing the democratic world are the same. I think we've heard pretty clearly from Donald Trump that he doesn't see himself as a leader of the democratic world. He's not going to pull the democracies together in order to fight back against kleptocracy or to push back against Russian disinformation on the internet. I mean, those are tasks that will have to be taken over by Europeans or by the Asian democracies or others who want to protect their integrity and protect their sovereignty. Trump is also at this stage still a kind of, there's a question mark about what he'll do. He hasn't given us yet a plan what he'll do about Ukraine. We don't really know what his attitude towards China will be. So I think there are a lot of, there's still a lot of open questions. But the main point being that he doesn't see himself as somebody who's the leader of a large group of allies. And I think other countries would do well to listen to that. He's been saying it throughout the campaign. He said it during his previous presidency. It's important that people listen to that and take on board the lessons from that.
And it's Creedy in London. Let's talk about one of those allies in particular that's dealing with a bit of political chaos, and that, of course, is South Korea. We know that South Korea and the United States had a little bit of a tenuous relationship in Trump 1.0. Now, with this new chaos and the concerns around the defense associated with that part of the world, specifically against North Korea, and of course what that means for the war in Ukraine, how are you thinking about it? What does the ripple effect of the Yoon administration in South Korea mean for a Trump 2.0?
Actually, what was really impressive about South Korea and what has been noticed in a lot of countries, including this one, I'm in Poland today, is the speed with which the South Korean political system reacted to the declaration of martial law, the way in which the opposition parties, but also the public, consolidated to push back against it because they cared about democracy and wanted to save it. And that has, that will have an effect on others. I mean, people have noticed that, there remains a country that cares enough to keep Democrats in power. I mean, how it will affect, Trump's attitude to South Korea, which he's been in the past skeptical of the U.S.'s role as South Korea's protector. He's talked about the high cost of U.S. troops there. Is hard for me to say. Probably it won't. Again, I would repeat what I said a few seconds ago. I mean, he doesn't see himself as the leader of a big international democratic alliance. He thinks allies are burdens. And so whatever kind of government South Korea has, I think understanding that, not being misled, not living in some kind of fantasy. It's important to listen to what Trump is saying and be prepared for perhaps a different kind of relationship with America. That's more important than the question of who is the president right now.
In terms of South Korea's role of that trilateral cooperation in the South China Sea, does this have a ripple effect there in terms of kind of that growth story or that kind of fighting Chinese aggression in the sea? What does that look like?
I mean, actually, the South Korean stand in favor of democracy, I think, is a great example for that part of the world and for the broader ideological argument against China, if that's the right way to put it. I hope the Japanese were watching. I hope that others in the region, the Philippines and so on, were watching as the South Koreans defended their system, because there is going to be a lot of pressure on democracies. I mean, there is already. The degree to which they can pull together and stick together based on shared values will help them a lot. I mean, of course, there are strategic reasons why Japan and South Korea and others should be allied, but having something shared as well, having a sense of values, a sense of the importance of liberal democracy to share, I think is potentially could strengthen that alliance.
And take us to Romania, if you could. And we're looking at the prospect of a NATO skeptic, somebody who's spoken very favorably of President Putin, potentially becoming the president of that country. We'll wait for the final round of the elections. And you've been through some of the allegations about how he was supported in the first round by Russia via TikTok. What does that mean for Europe? What does that mean for NATO if this member of both is run by somebody of that ilk, given what we've already seen in Hungary?
So first of all, let's give the Romanian people a chance to vote in their election and not, jump ahead and assume that we know who the winner will be. Yes, obviously, it's of huge concern if Romania were to drop out of the alliance to help Ukraine. Romania's just geographically, it has a border with Ukraine. It's very important for Ukraine's defense of itself in the Black Sea. Romania has been one of the routes that the Ukrainians have used to ship grain and other goods, outside of the country during the war. And maintaining Romania as a solid part of the alliance is very important. Remember also that Romania is a country that has a president and separately a prime minister. It looks like right now the prime minister will remain somebody who is in favor of Romania's role in the European Union and in NATO. So it might be a little bit more complicated than just Romania disappearing from the club or becoming Hungary. I mean, the president will not have full control over the country or over its politics. Clearly the amount of interest and money and attention that Russia has paid to this campaign, the investment in this candidate shows how much Russia cares about the unity of Europe and the unity of NATO, and how much, obviously it's easier for Russia to win this war by picking off political allies of Ukraine rather than winning on the battlefield. So,
And thinking about Ukraine, and I wanted to go there next. I mean, you talked earlier on about how under a Trump presidency, it would be up to Europe to push back against Putin if that's what Europe wants to do. Are you anticipating that Europe will have an independent foreign policy stance when it comes to Russia, separate from what we hear from the White House?
I mean, I don't think anybody wants it to be separate. And as I said, we just don't know yet what Trump's policy is. And I wouldn't, again, prejudge that either. It's pretty clear that inside Europe, there is now there's almost a NATO within NATO, the Scandinavian countries, the Baltic states, Poland, maybe the UK. There's a group of countries who do understand both the security risks and the internal risks that a Putin victory would pose to their countries and to the stability of their countries, remembering that Russia has been involved in sabotage all across Europe in recent days. There have been underwater cables that have been cut. There have been buildings that have exploded. There have been assassinations all over Europe in recent days and weeks and months. And there is now a group of countries who understand why that's important and are willing to work together. And I think you'll hear more from them, and you'll see pretty clear efforts from that kind of inner NATO, which may eventually include Germany after its election, might eventually include France and others as well. But you'll certainly see them pulling together to make sure that there isn't a collapse or a catastrophe in Ukraine, which, by the way, I should say, it seems as if Trump doesn't want either. The one thing we know about him that he's been saying in phone calls with foreign leaders is that he doesn't want there to be a collapse. What that means in terms of what a negotiating strategy would look like, of course, we don't really know.
Anne, thank you very much. Thanks for joining us. Anne Applebaum, author of Autocracy, Inc., The Dictators Who Want to Run the World. Thank you very much for joining us to discuss, well, many geographies and where we're seeing those tensions. I should tell you on a programming note, at 10 a.m. UK time, we'll have a conversation with the German Finance Minister, Jörg Kukies, and later, 10:40 a.m. UK time, we will speak exclusively with the Bank of England MPC member, Swati Dhingra, so a host of different topics under the microscope from German politics, German economics, to what happens at the Bank of England.
And then I believe next we go to France as well. Still ahead on this program, more from Bloomberg's exclusive interview with Marine Le Pen, including if she has any plans to meet with U.S. President-elect Donald Trump on his visit to Paris. We're going to get into that next. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Welcome back. You're watching the opening trade. 47 minutes into the equity market session. This is what the narrative looks like. Generally, nothing happening except in France, where actually you're seeing some outperformance this morning as maybe some of the names that got thrown out earlier on this week on the political tensions start to recover a little bit. Maybe names like L'Oreal and Airbus tracking a little bit higher. In terms of what comes up throughout the rest of the day, there is but one event. We're moving from the politics of the payrolls. Yes, we've got University of Michigan data, which I think is quite interesting. And it'll be fascinating to see what happens there. You've got a few Fed speakers, but it is payrolls day today. And I've got the charts up in front of me of the whisper number, which has been creeping higher over the last few days. So the survey number is 220. The whisper number is now up to 217. Is the market set up for an upside outperformance or a downside outperformance? And just in terms of the way that we're going to manage that, if you do see an upside number, does the market kind of react more than a downside number? And I suspect it may be a little bit of the latter. I wonder whether you get a euro squeeze with a downside print today.
Well, I think the point that's been made on this program time and time again is that it comes down to Fed expectations, right? But it's the
for December.
For December, sure, but it's in terms of like the 10-year yield, for example, in the 2-year, which you're already, by the way, seeing bumps early or ahead of in the session, 416 on that 2-year. But then I think it also comes down to the margin of the beat, right? Because if it's 220,000 is a survey number, that's a massive number. So if you were to get something substantially bigger than that, or even meet expectations, that is still significantly higher.
Do I just instantly discount it and go, yeah, we're just recovering from last month? Is this a real number?
Well, yeah, well, I wonder how much people really are fixated on the estimate this time around, given that last month was such a different story. It was all hurricane related. I mean, what was it, 12,000, Critty? It was something, it wasn't normal in any sense. And so will there be just no noise in this number? I find it hard to believe that you kind of turn your back so quickly. And the US labour market moves fast, but does it turn its back so quickly in all that chaos of the last month?
We've also had the conversation that maybe it's not the payrolls number that matters anymore. Maybe it is still the inflation numbers that matter more, which is a real turnaround from what we've seen in the last couple of months, right?
Yeah, Bloomberg Economics saying that'll be the number to watch. That's next week, the middle of next week.
Always feels like next week, doesn't it?
Just when you're watching that Chinese briefing about growth, you'll also have to focus on the inflation number out of the United States.
Can I not just get ready for Christmas? Shouldn't that be maybe what we're all doing?
And that's what traders are doing, according to a BMO survey of clients. Everyone's just getting ready for the festivities. 65% said they're going to do nothing, no matter what happens with the payrolls.
I am putting the tree up this weekend, rest assured.
You are literally 6 days late.
We have gone prematurely to our plans for the weekend. Let us focus in on the hard news agenda, though, of this week, and there's been plenty of it coming through to us, much of it across the channel. Far-right leader Marine Le Pen has told Bloomberg in an exclusive interview that France can overcome government collapse and deliver a budget in a matter of weeks. But that's if the next Prime Minister is prepared to narrow the deficit more slowly.
Getting to 3% in 2029, I don't think it's credible, but I'm not the only one. I don't think it's credible either to the President of the Cour des Comptes. Once again, these are simply promises, and they know very well they can't keep to them. Mr. Barnier made this promise, and in reality, his budget worsened the deficit by 12 billion. So if we don't make significant, intelligent structural savings with regard to the state, and if we don't put in place the conditions so that companies can work, invest without being suffocated with extra taxes, we won't get there. But with these two solutions, we can succeed as quickly as possible to get back to a reasonable deficit, even if the 3% was just decided on the back of an envelope.
How fast could that be? C'est l'affaire de quelques semaines.
Well, it's a matter of a few weeks. We'll discuss it with the new Prime Minister. We'll work together. We'll explain what our red lines are. Our red lines are we can't ask the French people to pay the bill for the mistakes of their leaders. That's what Mr. Barnier did. He massively increases taxes, he hits sick people, retired people, he hits everyone. And at the same time, once again, there's zero savings from the state. That's inadmissible.
Meanwhile, French President Emmanuel Macron says he will serve out the remainder of his presidential term as he seeks to put an end to the political turmoil in the country.
C'est pourquoi je nommerai dans les prochains jours un Premier ministre.
This is why I will appoint a new Prime Minister in the coming days. I will ask them to form a government for the general interest, representing every political force within the spectrum of parties destined to govern, and that they could join or at least agree not to bring it down. The Prime Minister will consult and form a more effective government at your service. Its priority will be the budget.
Let's bring in Bloomberg's anchor of the Pulse, Francine Lacroix. And Francine, good morning. You've been in Paris recently. You conducted that interview with Marine Le Pen. You have to wonder, she's giving very calming messages to markets, isn't she? She's saying, yeah, there is a budget I could approve. It just wasn't that one. It wasn't the one Michel Barnier had. It'll be one that doesn't do the fiscal hard work as quickly as he'd planned. Now I guess we just wait and see. Is there really a budget that they can coalesce around?
Yeah, so this is the million-dollar question. So I came back actually on the same Eurostar with Critty yesterday, and we, breaking news, the Eurostar was not late. So that's one thing that we can put on the positive side. I mean, the negative side is that there's going to be a lot of volatility over the next couple of months. And you're right, Anna. Look, Marine Le Pen has been at pains over the last 4, 5, 6 years after a pretty disastrous debate 6 years ago, where she was seen as, pushing out some crazy ideas on Europe, some crazy ideas on the markets, as much more mainstream. So she wants to say, she'll fight with you if you say she's far right. She says, no, I'm center right. I am, someone who's reliable, which is also why she's not asked Emmanuel Macron to resign. So all of her conversation when it comes to budget and deficit was trying to reassure the markets, whilst at the same time saying, look, we don't want tax hikes, especially not for companies, because that's her base. She wants the companies to be on her side. Let's see who's a prime minister and actually what that prime minister comes up with in terms of budget. It's unclear to me whether there will be a lot of chaos in the next couple of months or whether she can keep it calm.
Yeah. Well, Fran, as we were taking the Eurostar together, you saw me kind of cram all the newspapers from yesterday, and I was shocked that on all the front pages, it wasn't Macron, it wasn't Barnier, it was Le Pen. And I think it builds on Anna's question, what is she actually saying is the solution? I haven't heard any policy ideas from her that could be kind of the antidote to some of the things that she's kind of shutting down.
Yes, again, I mean, Marine Le Pen in France really represents something. Her father was seen as one of probably the most racist right-wing politicians, and she, throughout the last 15 to 20 years, has tried to change that image, again, to be more calming or a more calming source. So the fact that she now holds the cards, not only to, help with the next prime minister, but that she has 11 million people, let's remember, that voted for her party back in July, means that she's front page news because she could possibly be closer to the presidency. Now, two caveats for that is that Emmanuel Macron stays in power until 2027, unless he resigns, and he made it very clear yesterday that he would not resign. And then she has a bit of judicial trouble, and so we'll know around the 31st of March whether she can actually run for president next time or not.
Why does she not want to bring Macron down? That's the bit I don't understand.
Because she wants to be seen actually as respecting the institutions, and I think that goes back to like her family. She brought the government because she says it wasn't a good budget, but the institutions. So she has to, I think, tread a very careful line in not being blamed for chaos. Now we're not seeing chaos in the markets, and because of her past and because of her father's past, she wants to say, well, the Constitution doesn't say the president should resign, so I'm not asking him to resign.
So she needs this, she needs a budget quickly, because if there's no budget for a long time, then chaos may ensue and she may end up taking the blame.
Again, so I think that's a good question. It was unclear what her intentions were. I think she says she doesn't want chaos, and she certainly doesn't want chaos that she will be blamed for.
Yes.
Whether she wants, Emmanuel Macron to stay on, no. Whether, chaos would help her, it probably would, as long as she's not blamed for it. So it's kind of like a treading line. This is like politics at its finest.
Sticking with Paris, Guy.
Notre Dame this weekend.
On to the weekend. Yes. It is reopening.
Yeah.
Did you go to the look?
And guess who shows up?
Yes.
The main show, as always.
You would have thought the building, the reopening, would be the main show, but it's going to be Donald Trump, isn't it?
Yeah, so first of all, we have had a look inside. It's beautiful. And this was going to be the big centerpiece for Emmanuel Macron. Like, look at, what we've done 5 years after that fire that really shocked France. Donald Trump is showing up for his first overseas travel since he became president.
And Marine Le Pen might bump into him.
Yeah, so I was surprised. We tried to, we thought she had better ties with him or stronger ties, but it kind of reminded me, Macron did something quite special with Trump last time around.
Yes.
He wowed him.
It was very showy, wasn't it?
I think there was a romantic dinner with Melania Trump at the bottom of the Eiffel Tower that Trump and family liked.
Donald Trump quite like the military processions around the Arc de Triomphe as well. I'm putting the Christmas tree up this weekend. You've also got the final Eras Tour concert.
What is the global economy going to do next? Is my question around the Eras Tour.
Without Swifties.
That is definitely crucial.
Yeah, crucial. We should get a programming note on Tuesday. The opening trade will be live from Bloomberg's inaugural Woman, Money, and Power event. We're convening the most influential female voices in finance. Discuss the biggest themes facing the future of business. Do not miss that. We'll, of course, be on location. This is Bloomberg.
Everything you need to get the edge at the end of the market day.
Big tech.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
More turmoil in South Korea. President Yoon's planned trip to the National Assembly is delayed as he loses a key ally ahead of an impeachment vote for treason. Emmanuel Macron vows to serve out his term as French president, promising a new prime minister within days. Meanwhile, National Rally leader Marine Le Pen tells us a budget will pass if the government narrows the deficit more slowly.
Well, it's a matter of a few weeks. We'll discuss it with the new prime minister. We'll work together.
Plus, after a bullish day for Chinese shares, investors await U.S. jobs data due out later today. So let's take a quick look at the European markets map. But I'm not going to lie, all of the action will probably be in the U.S. after that jobs data. We also have a couple of stories saying that everything is winding down. I don't see any winding down, but maybe traders are taking a bit more time off as they get ready for the holiday season. The FTSE you see down 0.2%. The CAC 40 and the FTSE MIB again in between 0.5 and 1%. The DAX 2% higher. And then we'll bring you the very latest on what's happening, of course, with S&P futures, but also the U.S. 10-year yield 4.1818. Let's see whether U.S. jobs data actually feeds into Fed expectations for the month of December. Euro dollar 105.82. We've seen a pretty stable euro dollar in the last couple of weeks, despite all of the political turmoil in France, and then Brent crude 71.74. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacroix.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. Now, South Korea's President Yoon Suk-yeol has cancelled a visit to Parliament where he faces impeachment proceedings for a failed attempt to impose martial law. Now, there were reports that opposition lawmakers were planning to block Yoon from entering the building. All of this, of course, comes ahead of a parliamentary vote on an impeachment motion against Yoon expected to take place by Saturday. Well, Bloomberg's Sherry Ann reports.
South Koreans are out in force, demanding President Yoon Suk-yeol's resignation. A former star prosecutor that played a key role in convicting former presidents of abuse of power, his government now is on the verge of collapse. South Korea has had a painful and bloody path to democracy, something that these people are trying to remind the public. Now, these crowds can grow really fast. The last president to be impeached, Park Geun-hye, faced demonstrations of a few thousand people in 2016 to crowds of more than 2 million in just a matter of months. That hit consumer confidence, which sank consumer spending. The economy is now much weaker. So authorities right now are trying to calm markets, convince investors that democracy remains healthy and that they remain committed to support the economy. Sherry on Bloomberg, Seoul.
And we'll have more on the political turmoil in South Korea a little later. Now, the French President Emmanuel Macron says he will serve out the remainder of his presidential term as he seeks to put an end to the political turmoil in the country.
C'est pourquoi je nommerai dans les prochains jours un Premier ministre.
This is why I will appoint a new prime minister in the coming days. I will ask them to form a government for the general interest, representing every political force within the spectrum of parties destined to govern, and that they could join or at least agree not to bring it down. The Prime Minister will consult and form a more effective government at your service. Its priority will be the budget.
Meanwhile, far-right leader Marine Le Pen told Bloomberg in an exclusive interview that she believes the outgoing administration's plan to bring the budget gap to 3% of economic output by 2029 is not feasible.
Getting to 3% in 2029, I don't think is credible, but I'm not the only one. I don't think it's credible either to the president of the Cour des Comptes state auditor. Once again, these are simply promises, and they know very well that they can't keep to them.
Now, for more, let's bring in Bloomberg's Paris bureau chief, Alan Katz. Alan, it's so good to see you. I mean, yesterday we were at the Marine Le Pen interview together. She said that, she would be expecting actually a new prime minister by end of year yesterday. Why is Emmanuel Macron taking longer than expected?
Hi, Francine. So, one, he normally takes longer than expected. It frequently happens in France to say, oh, something's coming today, in hours, or tonight, and it ends up taking quite a bit longer than that. So that's really par for the course for Macron. But I suppose the real reason is that he's meeting today with a variety of political leaders in trying to find this group of parties and politicians who can come together to form a stable government, at least for a short period of time. As you discussed with Marine Le Pen yesterday, there can't be elections in the near term in France, parliamentary elections. They have to wait at least until July of next year. So something has to happen because there is a 7-month period at least when you're stuck in France with the current situation. And so this morning, actually, Olivier Faure, who heads the Socialist Party, said on France Info Radio that he is open to compromises as long as they are mutual compromises. So there is a bit of movement at least. Now, that said, Macron and his party have in the past said that they wanted to reach out to the Socialist Party, and things have never worked out in terms of bringing them into some sort of grand centrist coalition to help govern France. And so I would be quite skeptical about whether or not this would actually achieve anything. But there at least there are discussions going on, if nothing else. And those discussions take time. So that's why it's taking longer, and I wouldn't expect there to be an announcement today.
So, Alan, I mean, it's going to be a big weekend, of course, for Emmanuel Macron because he has to try and find a new government, a new prime minister, but he's also hosting 50 heads of state, Donald Trump, tomorrow at, of course, the reopening of Notre Dame. I mean, is that going to be awkward, or are we expecting news out of that?
So, with Donald Trump, you never know. There's no sort of news expected from it. It's the point is supposed to be the grand opening of this great cathedral that's one of the best known churches in the world, and it was, as everyone knows, it was ravaged by a fire 5 years ago. There was a really compressed rebuilding time, and it's supposed to be the sort of the big party for its coming back, for its reopening, and that's really all it's supposed to be about. That said, with Donald Trump, really, you never know. He's coming, I would imagine, in part to sort of show his. He was actually, in all fairness, he was very quick back in 2019 to say what a disaster it was for this fire to have happened. He wants to show his sort of solidarity with Notre Dame. He was, early on in his first term, relatively friendly with Emmanuel Macron. Things sort of disintegrated a bit later on in their term, but we will see if there is a real meeting between the two of them, and if there is something to come out between them in terms of sort of Franco-American relations and how Macron might work with Trump when Trump comes into office in January.
Alan, thanks so much, as always. It was really good actually doing that interview together. Paris Bureau Chief there, Alan Katz. Now we'll have more of our exclusive interview with Marine Le Pen, the leader of the National Rally, a little bit later on in the show. Now let's dive into market reaction from the political crisis in France. We're now joined by Justina Lee from Bloomberg and Hannah Gooch-Peters, global equity investment analyst at Sanlam Investments. So thank you both for joining us. Hannah, I mean, it's kind of, when you look at bond yields, or actually when you look at the market reaction, they had a brief panic, but actually they're fine with France not having a prime minister right now.
Yeah, so the briefness of the reaction actually really surprised me. But then if you think about the weakness overall in both the French equity market and the European equity market this year, I think a lot of bad news has already been discounted in. I think that the European market, the French market, it's got those large constituents, and this year has really showed the dangers of buying into expensive constituents like L'Oreal or LVMH, for example, when you've got a weakening fundamental backdrop. They've been very, very weak stocks this year.
Justina, I mean, do they also, is there, I guess what's priced in is possible ECB intervention were something to go wrong, or does that come later?
Right. I think what's kind of interesting is sort of, for investors, they might even welcome a bit of, fiscal expansion. And I think that's kind of been a big theme for the area. They're also wondering if Germany is going to do a little bit more to support the economy. But kind of more broadly speaking, I mean, I think what a lot of investors are wondering going into next year is we've had another year of incredible U.S. exceptionalism. I think this is set to be the best kind of year relatively for U.S. stocks since 1997. And so at this point, the U.S. really is not the value play. But do you really see catalysts kind of in Europe to rotate out of that? And it's interesting that most strategists thinking about next year say not yet.
Yeah, Hannah, I mean, I guess the million-dollar question is what's an entry point? I mean, in France, but also Germany, we don't know what happens with the elections in February.
Yeah, of course, and I think what's really important is those fundamentals of the underlying businesses, and I think you have to go for companies that have both a valuation discount but also a dependable earnings stream. And I think that just if you have a look at Europe versus the US, you touched on the US consumer, for example, the strength. I just think that you've got more opportunity in the US. Yes, overall the stock market is more expensive on a headline level, but I think that the US consumer is just in a much better place than Europe, and and on a fundamental basis, I just think that's a much better place to go.
We're also, I mean, there's political turmoil in South Korea with many questions. I mean, we didn't really know what happened, even if there was martial law for the first couple of hours that we saw big market swings. Does that play out in the longer term in terms of investor perception on South Korea?
Yeah, I think that's the big question here. And I mean, we're already seeing some more of that volatility coming back, with markets kind of speculating that maybe there would be another martial law earlier today. And then we kind of saw the military deny that, and then markets kind of pair those losses. And I think, it's not just about the political instability. I think at the same time, South Korea is also facing the economic threat from, another Donald Trump term, given their heavy reliance on exports in the economy. And we're already seeing a lot of economies worried about a recession there. So I think it's both that and also kind of the political element. And I think it's going to be very difficult to kind of convince foreign investors that this is the market to get into.
Hannah, is there a read across, for what's happening in South Korea, or is it just, I don't know how invested, your clients want to be in South Korea right now?
Well, I think there could actually be a substantial opportunity in a company like Samsung, for example. It's been very, very weak this year, but I think there could be, more than 50% upside potentially in the name. It's trading on exceptionally cheap valuation. It's got a huge cash balance. Of course, it is the leader in the memory market. So, if they can bring their products to market and they can, the sort of overhang, if you like, from all this turbulence and everything goes away, then there could be, real value in a company like that, especially versus what's a more expensive developed market on a headline level. This could actually really be an opportunity for investors while the news flow is bad.
Okay, thank you both. Bloomberg's Justina Lee and Hannah Gooch-Peters from Sanlam Investments both stay with us. Now, Lululemon has lifted its full-year outlook on strong sales overseas. The company now sees between $10.45 billion and $10.49 billion mean, it's pretty close in revenue for the current fiscal year. You can see pre-market gaining some 9.5%. Maybe it's because I started doing yoga. I'm just kidding. But it is, as people are getting fitter across the world, I guess that helps with sales of Lululemon. Much more to come, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Welcome back, everyone. Still with us, Bloomberg's Justina Lee and Hannah Gooch-Peters from Sanlam Investments. What a week. So we've survived and we're Friday. But then actually there's a lot of U.S., the U.S. jobs report today is very interesting. It could probably change the dynamics of what the Fed does, Justina.
Yeah, I mean, economists are currently expecting 220,000 new jobs, which would be quite a big rebound from last month. But what's interesting is, last month there were the hurricanes and there were the strikes, and so we got an unusually low number. And so it was kind of hard to read whether that was just a reflection of those idiosyncratic events, or it actually was already showing some underlying slowing in the job market. And so today we're going to get kind of, last month's numbers, but also revisions from the month before, and hopefully we'll see kind of that trend a bit more clearly, and weeks ahead of the Fed decision.
Yeah, Hannah, I mean, not my concern, but actually my question is that once Trump comes into power and there are tariffs and there could be immigrant deportations, it changes the dynamic of the U.S. economy. So how difficult is it for Jay Powell now to set policy in December?
I think that, so obviously he's looking to keep inflation steady, and he'll be looking very keenly at the jobs numbers. But I think just from an investment perspective, the news about Trump, we've seen anything geared towards small businesses, pro-business, is moved substantially. Companies like Intuit, say, for example, small business accounting software, Paychex, payroll software for small businesses, all reflected a lot of optimism already. Yeah. I think that what we've got to do is focus on the strength in the U.S. consumer. So U.S. consumer stocks, again, performing very, very well. And I think that trend is set to continue, regardless of actually what the Fed decision is in December.
So focus on a lot of the retailers. I mean, big tech, we're quite unclear about how they'll handle that.
So I think big tech is almost a law unto its own at the minute. You know, these companies have exceptional balance sheets. A company like Nvidia, for example, doesn't care whether or not we've got a higher risk-free rate. It doesn't care whether the cost of debt goes up. So, you know, I think there's almost like a flight to safety into those names. Of course, momentum trade is really, really gathering momentum, let's just say. I think there are actually a lot of opportunities outside of those big tech names. And if we continue to look at names like, not so much retailers, but more like, say, for example, Hilton, you know, consumer stocks, even if we look at automatic data processing, of course, with the, you know, the payroll numbers, but these are all companies that really do, you know, they look at enrollment numbers, they look at the numbers of new employees that are coming in, and they, of course, get paid on that because they're offering that payroll accounting software for those businesses. So I think that if we look at companies with dependable earnings streams, I think that that's a better place to be than, for example, just trying to guess which way this sort of decision is going to go and potentially going to areas of overvaluation.
I mean, crypto was at 100,000, but again, it's quite unclear actually what kind of policy we'll get apart from, you know, gold up, crypto up, and for the moment, stocks are holding high.
Yeah, I think, you know, crypto partly reflects just the return of animal spirits all across markets. But also, I think it's probably safe to bet that, you know, the new administration will be kind of a lot more supportive of the industry, especially if you contrast it with, like, the hostility from Gary Gensler. I mean, overnight we got the news that, you know, Trump has appointed David Sachs, you know, the podcaster and venture capitalist, as, like, the czar of kind of, you know, AI and crypto. And I think, you know, it's probably pretty safe to bet that he will be more supportive of crypto, but at the end of the day, it's all about speculative sentiment and whether the Trump administration is going to keep that up.
Hannah, what are you watching for in the next couple of weeks? I mean, animal spirits in the U.S., is there anything else that, you know, could change your view on certain stocks that you're looking at?
I think, Francine, I'm welcoming any sort of volatility in the market. I think the important thing right now is to try and use opportunities. So far this year, when you have that narrowness in the market, there are opportunities to buy into companies at more reasonable value. China, I think, is really interesting. Of course, we've seen news on about stimulus in China again today. I think there's still very good upside in names that are very high quality, that are focused on sort of China, like Yum China, for example, like Tencent, perhaps. So I think that, you know, one just has to be nimble. If you've got the ability to buy into quality names with durable, predictable earning streams at a reasonable valuation, I think that's where you have to put your focus. But, you know, these opportunities coming and going very quickly this year.
Hannah and Justina, thanks so much. Bloomberg's Justina Lee and Hannah Gooch-Peters, Sanlam Investment Global Equity Investment Analyst. Now, coming up, oil studies after OPEC Plus delays the revival of shuttered production. We take a look at market sentiment next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, oil steadied after OPEC Plus decided to push back the revival of shuttered production by another 3 months. Now, the decision actually failed to lift sentiment in the markets that expected to suffer from a glut next year. Let's bring in Bloomberg's Jumana Braseche in Dubai. Hi, Jumana. So what were the key takeaways from the OPEC meeting?
Yeah, well, Francine, this is the 3rd time OPEC Plus have decided to delay their decision to start putting back those extra barrels to the market. And look, I mean, this is a reflection of market dynamics here and how much the price of oil has moved just since they came out with that initial announcement back in June that they were going to start gradually returning 2.2 million barrels per day over the course of 12 months. Since then, the oil price has dropped 18%. So a lot of headwinds facing the energy industry here, which prompted their latest decision to actually postpone it once again towards April of next year and then gradually start putting back those oil barrels, not over the course of 12 months, but actually over the course of 18 months, so even more gradual. But I would say, Francine, the lack of reaction today in the oil market is pretty telling itself, because this market is still reflective of the fact that looking ahead into next year, you are looking at a supply glut, and that there's a mismatch between the amount of barrels that are anticipated to hit in terms of supply growth versus the forecast for demand growth. And herein lies the issue, which means invariably what OPEC are doing is they're just kicking the can down the road. But at some point, they will have to make difficult decisions in terms of how much market share do they want to lose versus maintaining price stability.
So what is, Jumana, the outlook for oil prices next year?
Well, it's interesting that you say that, Francine, because actually several analysts out there, including the likes of Morgan Stanley, have marginally put up their revisions, put up their forecast for oil prices going into next year. They see prices averaging around $70 because of these adjustments that OPEC Plus have come to. They now see a mismatch or a supply glut of around 500,000 barrels per day. Before that, it was 800,000 barrels per day. So yes, there's small technical adjustments being made, but the big swing factor going into next year is going to be what happens to China demand. The demand signals coming from China have been weak. That has been the reason why OPEC and IEA, both of these groups, have revised down their outlook for demand growth going into next year. Add to that, you've got the possible return of the Trump administration. We know that he's very much focused on energy dominance, so all of those are factors contributing.
Jumana, thanks so much. Jumana Braseche there with the very latest on oil. Coming up, more from our exclusive interview with Marine Le Pen, the leader of the National Rally, on why she believes France could pass a budget within weeks after the government's collapse. This is Bloomberg.
case you missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. These are your top stories. More turmoil in South Korea. President Yoon's planned trip to the National Assembly is cancelled as he loses a key ally ahead of an impeachment vote for treason. Emmanuel Macron vows to serve out his term as French president, promising a new prime minister within days. Meanwhile, National Rally leader Marine Le Pen tells us a budget will pass if the government narrows the deficit more slowly. Plus, a bullish day for Chinese shares. Investors await U.S. jobs data due out later today. So back to our top stories, and South Korea's President Yoon Suk-yeol has canceled a visit to Parliament where he faces impeachment proceedings for a failed attempt to impose martial law. Now, there were reports that opposition lawmakers were planning to block Yoon from entering the building. For more on the story, let's bring in Bloomberg's Katya Dmitrieva. Katya, the scenes seem to be pretty chaotic right now. What do we know?
Yeah, the past few hours, well, really the past 48 hours have been incredibly chaotic in South Korea. And we know that things have changed even just today. You know, we had originally thought that impeaching the president would be done by Saturday evening. That was sort of the latest by law that they can have this vote. You know, unfortunately for the main opposition, the Democratic Party, what's happened instead is that the leader of Yoon's party said actually they'd be voting against any kind of motion. And then, of course, this morning, the latest is that the leader of Yoon's party said, in fact, new information had come to light, and they would be looking to relieve Yoon of his duty. They didn't use the word impeach, but he did say that Yoon should be relieved of his duties, and that's because there was evidence, allegedly, that Yoon had called for the arrest of several members of government, which is against the law. And so that's sort of where we stand at the moment as we're seeing these scenes unfold.
I mean, Katya, to ask very bluntly, is this a president gone rogue, or are there competing forces politically?
That is such a good question, and I think a lot of people are trying to answer this exact question right now. And depending on the answer, if you're a policymaker in South Korea, depending on the answer, it will decide the fate of President Yoon and who might be president of the country. We know that by Saturday there might be this vote to impeach the president. After that point, we'll see if they can get 8 members of his party to join that vote, because there is criticism of President Yoon, of course, not just from the public, from all these protests you're seeing, but also from analysts and from the opposition and members of his own party saying This was very clearly an attempt of the president to maintain power when his favorability ratings are now at a record low and when he's being called on to be investigated by a number of people in the opposition. So that's definitely one side. Yoon's side, of course, is that he was trying to quash anti-South Korean or pro-North Korea elements in the government. So depending on where you sit on that debate will really decide how you vote, how policymakers vote as soon as Saturday.
It certainly will, Katya. Thank you so much for all of the great reporting there on the ground, Katya Dimitrieva. Now, a measure of risk in French bonds actually fell on the possibility that lawmakers will strike a deal on next year's budget sooner than expected. Far-right leader Marine Le Pen told us in an exclusive interview that a budget can be passed in a matter of weeks if the next prime minister is willing to narrow the deficit more slowly.
Getting to 3% in 2029, I don't think is credible, but I'm not the only one. I don't think it's credible either to the president of the Cour des Comptes state auditor. Once again, these are simply promises, and they know very well that they can't keep to them. Mr. Barnier made that promise, and in reality, his budget worsened the deficit by 12 billion. So if we don't make significant, intelligent, structural savings with regard to the state, and if we don't put in place the conditions so that companies can work, invest without being suffocated with extra taxes, we won't get there. But with those two solutions, we can succeed as quickly as possible to get back to a reasonable deficit, even if the 3% was just decided on the back of an envelope.
How fast could that be?
Well, it's a matter of weeks. We'll discuss it with the new Prime Minister. We'll work together. We'll explain what our red lines are. Our red lines are we can't ask the French people to pay the bill for the mistakes of their leaders. That's what Mr. Barnier did. He massively increases taxation, he hits sick people, retired people, he hits everyone. And at the same time, once again, there's zero savings from the state, and that's inadmissible. Well, in any case, what I said, that the president's resignation is a personal decision on his behalf, and can only take place, in my view, when a political crisis takes place or an institutional crisis can find no other solution than the resignation of the President of the Republic. It is not the case for the moment. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with three blocs which, in reality, can't implement a policy.
Well, I also asked Marine Le Pen again why she will not ask President Macron to leave before his term ends in 2027 if she worries about severe market reactions in the short and medium term.
To ask him to resign would mean to disturb our institutions. Once again, it's his decision. Now, if there is a political crisis, an institutional crisis, and if he can no longer dissolve the assembly, if reshuffle serve no purpose, then the French constitution only leaves one other option, which is his resignation. But that wouldn't be a drama either. There would be new presidential elections. General de Gaulle, you know, designed our institutions, and they are very solid. They are extremely solid. Everything's done to make sure that the life of the nation can carry on and not create disturbances that can't be dealt with. If he were to resign now, there would be new presidential elections and new legislative elections.
But are you worried about these crises then leading to severe market reactions?
No, because the reality is that what worries the markets is the economic situation in France. What worries the markets is the lack of perspective concerning reducing deficits. It's the absence of savings at the state level, the increase of taxation on companies that worries the markets. And in fact, you've seen the markets have remained extremely stable over the past few days since the announcement of the no-confidence vote, and even after the no-confidence vote. In reality, they had concerns at the moment of the dissolution in June. But for the moment, whether it's the spread between France and Germany, the rates, or the markets. But for the moment, whether it's the spread between France and Germany, the rates, or the markets, for the moment, everything is relatively calm. Because once again, they realize that anyway, there has to be at all cost another policy other than that envisaged by Mr. Barnier.
But the market is probably looking at the fact that the ECB is standing close and that there's a want from France of getting the deficit down pretty quickly.
Well, yes, but once again, there's a long way to go between wishes and reality. Mr. Barnier wanted to reduce the deficits. He's increased them by 12 billion. You see what I mean? So, once again, using a hammer to bash French people over the heads with taxes, when we're the country with the highest rate of taxation in Europe, is not the solution. But it's the only solution that French leaders have implemented for years. It doesn't work. Look at the situation that we find ourselves in. So help companies, enable them to do business, reduce production tax, reduce the cost of energy, or at least reduce it to the same level as the cost of production in France. Those are things that will allow companies to develop and thus create employment.
Voilà, ça, ce sont des lignes qui vont permettre aux entreprises de se développer et donc de créer de l'emploi.
But Madame Le Pen, I mean, first of all, the Barnier actually proposal means that GDP would be the deficit of GDP would be 5% in 2025 compared to 6% this year. So it's going down.
Non, il augmentait de 12 milliards le déficit.
No, the deficit rose by 12 billion. The deficit rose by 12 billion. But you know, the head of Safran, which is a major company, has just given an interview. And what did the head of Safran say? He said Barnier's budget is a bad budget. So, in reality, the fact that it's last year's budget that's applied, however unfair it was socially, is actually rather good news for companies. There are a certain number of entrepreneurs in economic circles who are in fact pleased about the no-confidence motion because they consider Mr. Barnier's budget was worse than last year's budget, and that's saying something.
Well, I also spoke with Marine Le Pen about the reopening of Notre Dame Cathedral and Donald Trump's visit to Paris on Saturday.
Well, I won't meet with him, but maybe we'll bump into each other because I will indeed be there too, at the reopening of Notre Dame, which is a major event for us in France. I don't have any relationship with Donald Trump. I will have one, I hope, the day I become president of the Republic.
Well, Trump's visit to Paris marks his first trip overseas since the November election win and makes Macron the third foreign leader to meet with him since his victory. For more, Bloomberg's Kevin Whitelaw joins us from Brussels. Kevin, I mean, there's a lot going on. And then, of course, Donald Trump shows up in Paris tomorrow. How will Europe approach his visit?
Well, I mean, obviously, Europe is going to be looking for any clues they can find on what he's going to do on two big issues in his first couple days and weeks in office, and those are U.S. support for Ukraine, and then what his plans are with regards to tariffs that he's threatened to impose on Europe. So, if you're Macron or if you're a number of other European leaders, you're looking to find ways to reach out to him, to try to show him that Europe's engaged and ready to listen and work with him and try to avoid some of the things they fear most. If you're, whether it's a few other leaders who are maybe more Trump allies, depending on who shows up, they may be trying to get his ear on a different set of things. So a lot at stake as they try to set the tone for what will be the first days of his administration next year.
So, Kevin, how is Emmanuel Macron going to deal with these two competing forces? So he needs to form a government, find a prime minister. He's under increasing pressure from voters in France, but he also had a special relationship with Donald Trump the first time around, so he still wants to wow and impress him.
Yes, and I do think he's got, at least with this moment in Notre Dame, it is a moment to, on some level, show him some pomp and ceremony of the kind of thing that Trump does enjoy. He's previously enjoyed some of the French pomp and circumstance with military parades and other things. But Donald Trump is a guy who responds to strength. This is probably the weakest Macron has ever been, with the collapse of his government and also about to have the EU clinch a trade deal with the Mercosur group in South America over his vehement objections. So on one level, he's got the trappings of all of the elegance and the grandeur of Notre Dame at a time where he just couldn't be more vulnerable. So it's going to be interesting to see whether Trump responds to the pomp or sees through some and focuses on the weakness.
Kevin, Trump's picks David Sachs as White House AI and crypto czar, David Perdue as ambassador to China. What's your take?
Yeah, these are both interesting picks because after picking a number of harder line, people to fill key foreign policy and security positions, harder line on China. Picking David Perdue is a little bit of a middle ground pick, a businessman who's worked in Asia and has talked about the various reasons to want to continue to trade there. So I think on some level, I think China can look at that as maybe picking more of a businessman, the kind of person that can be talked to and that there's room to make deals with. On AI and crypto, David Sachs is a guy who is not a hardcore crypto guy. Trump has come in as a very strong booster of crypto, but I think what you're actually looking at in this situation is someone who may help lead a bit of a charge to put a legal framework around crypto, maybe a pro-crypto framework, but a legal framework, a regulatory one nonetheless. So that would likely be his job. At the same time, it's an advisory role. It's not, sort of a full-time member of the administration. So we'll have to see exactly what that means about his influence in the White House down the line.
Kevin, thank you so much. Kevin Whitelaw there in Brussels. Now, coming up, two of Britain's largest insurers are set to merge as Direct Line has accepted a £3.6 billion takeover from Aviva. More on that next. And this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Welcome back, everyone. Now, Aviva has reached a preliminary agreement to acquire Direct Line as a UK motor insurer
finally succumbs after fending off takeover interest since early this year. Now, the London-listed Aviva sweetened its bid to 275 pence per share. The cash and stock proposal valued Direct Line at £3.6 billion. Let's speak with Bloomberg's Aaron Kirchfeld, who, of course, runs the M&A team for us here. So you're always busy. You're always chasing deals, Aaron. I mean, why did they say yes finally?
Well, finally, after a lot of back and forth in terms of price, I think they got to the magic number, which was kind of 270 plus. They'd gone in initially at 250, then they bumped a couple days later to 261, and I think they were closing the bid-ask gap over time. And I think at the end of the day, Amanda Blank, the CEO of Aviva, really wanted this deal. She's gotten some credibility from her investors after reshaping the company, so I think she knew she could get the backing, even if she stretched the price to win over Direct Line and their board.
So what does this give her? I guess it's more online, kind of consumer-friendly?
Yes, more consumer. I think in particular it gives her motor insurance. So this makes them, according to our analysis, the biggest motor insurer in the UK. Aviva is very life-dependent, so this diversifies their revenue stream. And it also gets them a company that's been struggling a bit. Direct Line has been working on a turnaround, cutting some jobs. They missed the boat on comparison websites, et cetera. So I think she sees this as an opportunity to take a company that has a lot of potential, get it while it's turning around, and then get synergies, get growth, and diversify her portfolio.
I mean, Direct Line, I always think of the ads. I don't know whether that's a good or a bad thing.
Yes, the ads and the jingle that you can never get out of your head. Absolutely right.
Thanks for that, Aaron. In terms of M&A, so we're 6 months into a Labour government. We haven't had a Labour government for the last 13 years in the country. Has it made difference to the animal spirits and whether, companies want or need to buy each other?
Yeah, so I think there was some nervousness about when Labour was taking over, especially with the budget. Would that crimp M&A appetite in the UK? What we've seen so far is actually quite the different version. We've seen a lot of activity. The UK is way up, 80% plus year to date in terms of M&A, double the next European country in Germany. And with deals like this, like Direct Line, it's just more evidence that there is still appetite to do deals. And let's not forget, UK companies remain relatively cheap compared to their global peers. And what's an interesting trend on the flip side, as my colleague Vincent reported, is that we're seeing the most delistings of UK PLCs due to M&A in over a decade, which, on the one hand, you want to see M&A activity. On the other hand, you ask yourself, how much longer will there be enough UK companies for equity investors, et cetera, in the country?
So interesting. Aaron, thank you so much. Aaron Kirchfeld there, who, of course, leads our deals team. If you have a tip, you can email directly Aaron and his team. Coming up, our interview with the Queen Maxima of the Netherlands on her role as UN Ambassador for Financial Health. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Now, in her role as the UN Secretary General Special Advocate for Financial Health, Queen Maxima of the Netherlands has championed the development of financial services and policies to support ordinary people around the world. Well, she spoke to us about the importance of financial literacy and inclusion.
What we've actually realized is having access to financial service doesn't mean in and by itself that you become better at it. In the Netherlands, we have 99.7% of financial inclusion, and we do have 23% of the population that are struggling to making ends meet, struggling to save, struggling to manage their finances. In Kenya, for example, we've seen a very big jump of financial inclusion, but we also saw a lot of consumption credit by which a lot of households end up being over-indebted. So this issue of looking at the financial health, at the outcome, so it's financial inclusion for what, is extremely important. And yes, I think it's important to define financial health. What is financial health? It's not about, how much income a person gets, but it's actually how do we help clients and citizens in managing four things. First of all, how do we help them manage the day-to-day finances? Make it to the end of the month, you get a lot of money 1 week, and then, you don't get anything for some time, and they get a lot of bills. How do we help them bridge and budget, their monthly or the weekly, or even sometimes in India, daily? Number two, how do we help them to go for those long-term, goals they actually have? Buy a house, a mortgage, pension, being able to invest in your children's education, these long-term goals that, you can actually identify yourself with. The third one is the resilience part. How do we help people go into these, help themselves out of these shocks, health shock, job loss, climate change shocks, even small shocks, your car breaks down, and this is the one that you actually use to go to your job. Do you have that money to actually go to the garage and pay? And the fourth one is the confidence you actually have to be able to manage that.
I mean, this partly is financial literacy. This is, of course, managing money. Are women disproportionately affected, or does it affect all places in society, depending on what country you're in?
Well, I think it affects in different places because the contexts are different. For example, in a country like Kenya, school fees are a big worry for families. So that would be the reason why people get indebted, or they try to get a credit. Whilst in Tanzania, it would actually be a health shock because the health system is not that well organized. So per country would be different. For example, here in the UK, 1 in 4 people in the UK cannot come up with £300 in case of an emergency. So this issue of actually having some emergency buffer, it's a very, very important issue.
Well, that was Queen Maxima of the Netherlands on the importance of financial health and inclusion. Now, in a few minutes, we'll be speaking with the German finance minister, Jörg Kukies. Don't miss, of course, that conversation that has to do with trade ahead of the election in Germany. It'll be extremely interesting to see how he sees the political development going, and actually maybe some of the solutions that he sees for Germany needing. At 10:40 a.m. then UK time, we'll speak exclusively with the Bank of England external member, Swati Dhingra. Lizzie Burden will be doing that interview. A programming note also on Tuesday. From Tuesday, Bloomberg TV will have live coverage of Woman Power and Money event, convening the most influential female voices in finance from around the world to discuss consequential themes facing the futures of business. I'll be speaking to Jenny Johnson of Frankel Hamilton. I'll also be speaking to Laila Ibrahim of DeepMind and Anna Butin of Santander. Coming up, all focus on U.S. jobs. You can see S&P futures practically unchanged. Up next, Bloomberg Brief. This is Bloomberg.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
In December, and just 80 basis points for 2025. Veronica Clark will join us a little bit later on from Citi on her outlook for the rates market. We're also keeping an eye on HP Enterprise this morning. They reported better than expected revenue, all as a result, you got it, of their AI servers. Another earnings story, Lululemon raises its full-year outlook due to strong sales overseas, despite slower growth in consumer spending. And Boeing, falling after the federal judge rejected its plea, the plea deal that would have allowed the company to avoid criminal prosecution over 2 fatal 737 MAX crashes. Those are just 3 stocks that are on the block this morning. In just a few moments, we'll be speaking to Henry Allen of Deutsche Bank. A little bit later this hour, we've got Citi's Veronica Clark. Of course, the strategists there have a very different view to the economists. We'll ask Veronica why she's hunkering down again on a slowdown in this U.S. economy. The team at Deutsche Bank today are pushing ahead with the payrolls report saying this. Following the weather and strike-related disruptions from the previous month, the underlying trend in the US remains very positive, and we think that momentum will continue into 2025. Henry Allen is the macro strategist over at Deutsche Bank. And this is a paraphrase, really, of what Powell said. This economy in the United States, it is the envy of the world. For you this morning, what will be a solid bounce back, reaffirming that envy of the world position for the USA?
Well, I think if you've got a solid number, say non-farm payrolls came in above 200,000, then that would affirm that the number that last month, only 12,000, the lowest since December 2020, was likely just a blip. And there are reasons that we can explain that. So obviously we had the strike-related disruption, particularly from Boeing. We also had Hurricane Milton barrel into Florida during the week of the survey. So there are rational reasons why that report would have been lower and didn't speak to underlying weakness in the economy. So as long as we get a jobs report above 200K, we're saying 215 is our baseline, then we're pretty positive for what that means going forward.
So that's a nice bullish sort of consensus number in there. I mean, the estimate on the Bloomberg is 220, the whisper is 220. These asset markets are on fire. There's an exuberance in equities, in crypto, and there's a stoicism to the bond market. But does that reflect in the economy? This economy is strong. How strong do you think it can persist into 2025? And how dependent is that on, let's say, on an aggressive tax-cutting policy from the president-elect?
I don't think it is dependent on that, because actually there are a lot of positive tailwinds as we look forward into 2025. In particular, the Fed, of course, are now easing policy rather than hiking rates. And we know that monetary policy operates with a lag, so we should get the tailwinds from that into 2025. And to some extent, the tax cuts are already priced in, because at the end of the day, it was widely expected that both sides, Republicans and Democrats, said they wanted to extend the bulk of the Trump tax cuts beyond 2025. So I don't think that's going to be a significant macro factor. Clearly, there's then a risk from any tariff policy, but we'll have to wait and see where that lands out. But fundamentally, I think the trends are pretty positive into next year.
Look, one of the tales, and it's getting fatter because we'll know a little bit more about it, is the possibility of tariffs, Henry, and whether President-elect comes out on day one and goes hard and heavy on China. He's already indicated 25% for Mexico and Canada, whether we reach that or not. But the risk is this, the tail risk is this, and I want to know the differentiation between a reinflation spike on a policy narrative from the next Trump administration, or the risk of stagflation.
I think the risk is that you get what we've dubbed actually growthflation. So you get, rather than stagflation, where you have low growth and high inflation, actually that growth is strong and inflation kind of persists. You get that kind of no landing scenario we were talking about earlier in the year, because growth is still running very, very positively. Indeed, the Atlanta Fed's GDP tracker for Q4 still pointing to an annualized rate of 3.2%. But then actually you've got lots of inflationary force at the same time. You've got tariffs, you've got fiscal stimulus from the Trump tax cuts, and then of course central banks are cutting rates, and we know that the money supply growth is already picking up. So I think actually what we've dubbed growthflation is the bigger risk heading into 2025 rather than stagflation. I think to get back to a stagflation type scenario, you'd need to see some sort of negative shock, perhaps geopolitical of some kind, a bit like we saw in 2022. I'd be surprised at this point, given just how strong growth is running, if you did end up in a stagflation type scenario.
So with growthflation, what does that do to the bond market? Is that what takes you to 475?
Absolutely. I mean, we think that the bond market is being too aggressive in pricing rate cuts from the Fed, because they're underestimating how strong the economy could prove into next year. I mean, one thing I've been saying is for the last 3 years in a row, 2022, 23, 24, bond markets and investors have persistently underestimated how hawkish the Fed are going to be. I think they're too anchored by the low rates world of the 2010s, and actually we're in a bit of a new normal now. So I think, as you've seen this year, as growth holds up, if inflation lingers above target in particular, core PCE came in at a 7-month high last month, and I think you could see yields rise further, particularly as the market realizes you're not going to get those aggressive rate cuts that are priced in.
What does that do to risk? I mean, we've weathered the fastest hiking cycle since the 1980s from the Federal Reserve, really quite stoically as far as assets are concerned. At 475, it's not that much of a dislocation, is it?
I don't think it is. I guess the question is, how does that balance against all the other factors? I mean, we're quite bullish in the sense that, we can still see a run-up in equities alongside yields moving higher, particularly if growth surprises on the upside, which we think it will. We're a bit more bullish than consensus on growth. So I don't think there's a big dislocation. I just think there's something that needs to be worked out in terms of markets perhaps underestimating the underlying strength in the economy. I think some of that hard landing narrative from last year is still persisting a bit. I think there's still questions as to whether those lags from tighter policy, QT still going, might impact into next year. But I think fundamentally the narrative remains a pretty bullish one. And although valuations are stretched, certainly things are expensive in the US. We've seen this carry on, for instance, in the dot-com bubble. When valuations got to this level, it still went on for a couple more years. There's nothing inevitable about kind of some sort of big correction on the horizon.
No, in actual fact, that might be a bit cathartic, and that's the point that Bank of America made this morning. They looked at the price-to-book value in 2000 on the S&P 500, which is 5.5. We're at 5.3 at the moment, so there's still a little bit of fuel left in the risk tank. Henry, thank you so much. Henry Allen there of Deutsche Bank on this jobs day. Other stories trending on your Bloomberg terminal. This is what we got for you. China has set out to extend its domestic laws across international borders with a ban on selling some goods to the US. The rules apply to companies and to individuals both inside and outside China, and is seen as an escalation with the US just weeks before President-elect Trump takes to office. President-elect Trump says he is selecting venture capitalist David Sachs to serve as his AI and crypto czar. A newly created position, he is expected to help spearhead the crypto industry deregulation and provide cryptocurrency advocates a direct line to the White House. South Korean President Yoon has lost the support of a key ally. It increases the chances he'll be impeached in a vote set to take place in the next few days. It's an abrupt U-turn. The head of Yoon's ruling People Power Party called for the president to be suspended from office quickly. If the impeachment motion passes, Yoon could be suspended from duty immediately. Coming up in the show, we'll shift our focus to Europe. Political turmoil keeps the markets on edge. We'll bring you Germany's new finance minister live from Berlin, right here on Bloomberg Brief. Context matters.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
In Europe, France isn't alone in facing political turmoil. Germany is staring down an early election after its coalition collapsed. Let's cross to Berlin. Bloomberg's Oliver Krug is standing by with a special guest. Ollie, good morning.
Yeah, that's right, man. It's because just a few hours actually after Donald Trump was elected president of the United States, the German government sort of collapsed under the great weight of its budget debate. And now, 6 weeks later, one finance minister later, we are facing the German election, facing recession, tens of thousands of job cuts, but also negotiating this new relationship with the new U.S. president in the United States. And I'm very pleased to say we're probably speaking to the best person positioned to talk about all these things, Jörg Kukis, who is the finance minister of Germany and a close Scholz advisor for a very long time. Thank you so much for joining us.
Hi, thank you for inviting me.
Yeah, so I'd like to begin with that relationship with Trump and Donald Trump. How are you imagining that relationship playing out? How are you going to approach that relationship, both as sort of finance minister, but also as the SPD sort of approaching an election?
Well, in the last Trump administration, we always had very constructive relationships with U.S. Treasury. I was the state secretary in that time when the relationship between then Finance Minister Olaf Scholz and Treasury Secretary Mnuchin worked out well, and they launched quite a lot of joint initiatives and had a very constructive relationship. So I'm looking forward to repeating that.
Yeah, there's been no secret, though, to the fact that his aim has been to rebalance the trading relationship in terms of flows between Germany, between Europe more broadly. Are you prepared for that? Are you prepared for tough negotiations there? Do you have a list in your drawer of potential retaliation? How do you intend to approach that?
Well, I don't think it would be appropriate to speculate. The administration isn't even in office yet, so it would be inappropriate to speculate about the specifics about what may or may not happen. As I said, we're very keen to engage. We're very keen to have a strong dialogue. We are in a very, very strong trade relationship with the United States, so it's obviously a very important topic for us.
And I spoke a little earlier to one of your colleagues, Jens Spahn, in the CDU, and they were talking about their approach to both Trump and China. They were suggesting that maybe there would be an opportunity to reposition a little bit away from China in a sort of striking a deal with the U.S. in order to strengthen those ties and to boost those trade flows between the U.S. and Europe. Is that an approach that you would advocate?
Well, the reality is our trade ties with the United States have grown very strongly, and we are, according to our China strategy, setting a lot of incentives to de-risk from China. We are now exporting more goods and services to France than to China. We are exporting as many goods and services to Poland as to China. So we're already seeing that this diversification, the de-risking, is already taking place.
And you mentioned France. Obviously, what is going on there not have escaped your attention. There's been some concern, obviously, with yields at one point rising above sort of Greek, which is sort of seen as a very sort of strong indicator. A lot of concern around the economy. When you see that, where do you see the sort of risk, a spillover? Is it concerning you at all here in Germany?
Well, I mean, I'm obviously in very regular dialogue and contact with my French colleague, and the response of markets to the vote in the French Parliament was very constructive. There's very orderly markets, and the auction of the French OATs went very well. So in that sense, the market seems to be taking this in stride and constructively.
And another question also, we heard from Christine Lagarde also a little bit earlier this week in Brussels, and from Brussels we've been hearing more and more calls for joint debt, specifically on the issue of defense spending, collective defense spending in Europe, and really sort of trying to build up these militaries. Is that something that you can imagine yourself and the SPD getting behind, joint debt in Europe, in order to finance these sort of great defense needs of Europe?
Well, I think there's, first of all, the question of what role will European military play in the context of our primary defense coalition, namely NATO. I mean, for us, NATO is really the big transatlantic pillar of cooperation and joint defense. And of course, strengthening Europe within NATO is a positive. But of course, before speaking about the financing, we have to talk about what does the substance of defense cooperation, industry cooperation look like. Then we can talk about the financing, but we already have quite a few projects of common European financing of defense activities, the European Defense Fund, the European Peace Facility, the European Defense Industry Program. We've encouraged the European Investment Bank to become more active in defense industry financing. So there is already a lot of work being done on common European cooperation and collaboration on defense and defense spending.
A lot of the defense executives that I speak to, though, say they don't necessarily have the sort of visibility looking forward to sort of build up the capacity to build within Europe, and that maybe front-loading some of this would be an option. There's also this discussion about maybe a special purpose vehicle so that people, member states could opt in or out to sort of issuing joint debt. Is that something, do you think, that would make it easier in the sense that it's not just a blanket Eurobond and countries could assign?
Well, I completely agree with your analysis that providing visibility to the industry to add capacity is absolutely vital. I can tell you what the German government is doing. First of all, we launched, after Russia's invasion against Ukraine, a 100 billion defense procurement fund that will do a huge amount of defense procurement and getting us to the 2% NATO target. The German government has announced that beyond this, for the years after the expiry of the 100 billion fund, we commit to at least 2% NATO spending, which is a first in many, many years. Just these weeks, my ministry has passed through to Parliament 37 projects of military procurement, some of which will last for many years to be worked on. So we are doing everything we can to give industry the clear signal that this is not something that is passing, but that this is something that is for the very long term. And in fact, we are hoping and expecting a very broad consensus on this military procurement project that we are going through and investing now before the end of the year.
And that sort of 100 billion fund that you referred to is almost exhausted. Now, could you imagine setting up another such fund off budget to try to boost spending for the years to come?
To be honest, that will be the consensus that we have is that we need to fulfill our international obligations to NATO with 2% funding. The question of how that will be implemented in the budget, of course, voters will decide on the 23rd of February, and the parties elected will then figure out what the best method is. And I have no way of predicting what that will be, but the commitment that we honor the 2% NATO target is something that has very broad consensus in the German parliament.
And a quick word on the Mercosur deal right now. Ursula von der Leyen is in Latin America. Do you expect a deal to be struck? What impact could it have on the German economy?
Well, it's hugely important, and it's very positive. The German government has for many years supported the conclusion of Mercosur and many other trade agreements by the European Union. I would name India, Indonesia. So it is part of this strategy of de-risking from China and diversifying. So from a geopolitical perspective, it would be hugely important to send this signal of cooperation to the Mercosur countries that we want to engage more and that we want to build this very large free trade area.
And just a final word on Ukraine. It's very poor timing, the election for Ukraine, given that right now anything that can get to Ukraine will put it in a more dominant position to try to negotiate potentially with Putin and Russia, with Trump coming in. Is there anything else Germany can get to Ukraine to try to improve their position?
First of all, the budgetary means that are committed in the draft budgetary proposal from the German government that was not passed in Parliament is good. It is contracted, it is committed, so this money will flow. That is absolutely independent of the interim period that we have with the temporary budget. We also, against all odds, I would say, finalized the agreement of the G7 facility of $50 billion that will be provided to Ukraine. The US has committed, the European Union, against the veto of one country, has committed. So in that sense, we finalized this 50 billion commitment. The other G7 countries have contributed their share. So Ukraine will have a very strong financing. That being said, when I talked to my Ukrainian colleague, the finance minister, he told me about the devastating effect that the attacks of Russia on civilian infrastructure, on energy infrastructure, transport infrastructure, health infrastructure, is not only having on the human lives of all those affected by this, by these attacks, but of course also on the financial stability of Ukraine, because it reduces the ability of Ukrainians to engage in economic activity, and of course it generates huge costs. So of course we are monitoring very closely and speaking with Ukraine very closely on what the macro stability needs are of the Ukrainian budget and what the military needs are. And we are fully committed to supporting Ukraine for as long as it takes.
Well, Jurgen Kukis, thank you so much for your time. That was the German finance minister here speaking on an array of different issues, from the sort of difficulties of the economy here in Germany, as well as sort of the geopolitics and the question, of course, French stability, being very confident here.
Oliver, great conversation, very broad-ranging. Oliver Cook there with the German finance minister. Snapshot for you on markets. We're on non-farm payroll watch. 220,000 is the estimate and the whisper number. The dollar, you can see this morning, up by 1/8%. We've had 9 weeks of gains out of 10. This is going to be fill or kill for the dollar, really. You know, sub 200,000 or above 300,000 will determine the direction of the dollar, according to ING. Sterling is flat at the moment. Bank of America have a huge bullish call on that. They say 138 by the end of 2025, and on euro sterling, they see it getting to 80 to the euro, the strongest since the Brexit vote. Dollar yen, of course, will be a knee-jerk reaction to the non-farm payrolls, and if we get a stronger dollar, you certainly could hit 151 pretty easily. Let's talk about politics in the United States of America. The next president-elect, has chosen his ambassador for China. It is the former senator, businessman, David Perdue. He's been tapped for the role. Trump took to Truth Social saying this: he will be instrumental in implementing the strategy to maintain peace in the region and a productive working relationship with China's leaders. Kevin Whitelaw is with me. Kevin, it's interesting. This is a businessman. He's lived in Singapore. He's lived in Hong Kong. He has a firm understanding of Asian culture. The question is he a ballast, perhaps, to Navarro and Rubio?
Yeah, I mean, obviously, after Trump picked several China hardliners for other key positions, including Marco Rubio for Secretary of State, this is more of a sort of consensus choice, more of a middle ground choice. It does give someone there who has a business experience, understands how the markets work, and has operated in those areas. And remember, at heart, Trump is sort of a transactional kind of president, so he's putting someone in that role who can help be part of a transactional relationship with China, potentially, if there are things that they can agree on. I don't know that actually is necessarily going to change the overall sort of tenor of White House policy. You know, Trump historically has been someone who tends to be most influenced by the, sort of the last person in the room. And so, proximity to the White House, proximity to the Oval Office, and proximity to Mar-a-Lago are still, usually the things that actually influence policy the most when it comes to Donald Trump.
Well, when it comes to access and influence, his pick for AI and crypto czar is David Sachs. David Sachs is very close with Elon Musk. He's also very close with the PayPal team, Peter Thiel, etc. So this is a coalescing, as it were, of Silicon Valley.
Yeah, I mean, obviously, this is another position kind of like Musk's, which is not a formal part of the administration, but is more of an advisory role, sort of an outside advisor. So he's not going to be sort of a full-time person in the role, as we understand it. That means he doesn't actually have to sort of divest or step away from his venture capital fund. And when it comes to sort of crypto policy, obviously Trump has been very, very strong about wanting to promote crypto, been very excited about it. Crypto's rallied. Bitcoin's rallied like crazy on sort of what they expect from Trump. Sachs is a guy who's actually talked about wanting to regulate crypto in a pro-business kind of way, pro-crypto kind of way, but still put a legal framework around it. And so, it's going to be interesting. He doesn't come in as a full cheerleader, but he comes as somebody who seems to want to put some amount of market boundaries on it.
I like that, not as the full cheerleader. Kevin, thank you very much. That's Kevin Whitelaw on the very latest picks from the president-elect. Coming up, it is Jobs Day, in case we need to remind you. We'll push ahead with Citi's Veronica Clark in terms of her estimate. The consensus out there is 220,000. The whisper number on the Bloomberg terminal stands at 220. What is Veronica's call in terms of the continued cutting narrative from the Federal Reserve? This is Bloomberg.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Manish Krenny. Let's set your agenda. Caution ahead of the last piece of the jobs jigsaw for 2024, guiding the Fed's rate cut options. President-elect Trump picks David Sachs as his AI and crypto czar, along with former Senator David Perdue as ambassador to China. And our exclusive conversation with the Bank of England, Swati Dhingra, coming up. Markets are cautious. They're a little bit nervous ahead of the jobs report. 220,000 is the consensus estimate. We're flat on stocks. Bank of America warned there's a bit of a froth building in these markets. There's a risk you could overshoot, but they still see you getting to 6,666, 10% higher than here. Roll it over, have a look at the bond market. Ground zero for the reaction function, really, on the jobs report. Average hourly earnings, 3.9%. Our wages getting a little bit tighter. We're ticking up by 1 basis point this morning. Still, the market sees a 65% probability of a 25 basis point cut in December 2025. That is a different story. We're 3 hours away from that November payrolls report. Nella Richardson of Automatic Data Processing weighed in on the debate.
I think there's going to be two head fakes. One was in October, when we saw that really small number because of strikes and hurricanes from the BLS. The second head fake will be tomorrow. You're going to see a bounce back that won't tell the whole story of the labor market. The story of the labor market is that we're in a quiet period. There's not a lot of layoffs and there's not a lot of hiring. We're in this kind of stasis period. How long that quiet period lasts is undetermined. And what triggers it and which way, whether it goes up or down, still undetermined. So yeah, we're in a messy spot.
We're in a messy spot. There you go on the data. There's a shocking headline. Veronica Clark is the U.S. economist for Citi. Veronica, good to see you this morning. I think that's an interesting kind of take. You know, number of head fakes. We're in a messy space. Your biggest concern is this, is that the summer lull returns. You're not that optimistic about today's non-farm payrolls, are you?
Yeah, no, we're not. I mean, there is a lot of messiness to this data, absolutely. And that's why it's important not to read too much into any 1 or 2 months of data and really look at the trend. And we are trying to pick out that signal from all the noise. And it looks to us like the trend is still for a weakening labor market. And we've seen that for well over a year at this point. You know, we had the unemployment rate rising from a low of, 3.4% to 4.3% over the summer. A couple months of stability really isn't enough to convince me that that trend is not still weakening.
So what do you say differently to Jay Powell? Jay Powell says this economy is stronger than he thought it was in September. This economy is the envy of the world. You are disagreeing with the chairman.
Yeah, I mean, I think it's more, do you believe this level of activity or do you believe the trend? And what is a trend if not how the level of activity is changing? And certainly the employment picture is going to be most important for the Fed. I think when Chair Powell talks about the data looking stronger, he's talking about some big revisions that we had to GDP growth, which is true. But okay, GDP growth was even stronger than we thought, and the labor market still weakened.
So what do we go into in this jobs market? Is it a form of churn? Is it a form of turnover? Is it about downsizing? If growth is strong, you don't necessarily need to downside, but you may need to re-engineer.
Yeah, so I think everyone agrees on what we're seeing in the labor market, which is this very low churn environment where there's very low hiring. There aren't layoffs yet. You're not laying off people, but layoffs happen even in a healthy economy.
Yeah.
And if hiring is as low as it is, you would be biased to think those people are not going to be quickly finding jobs. The unemployment rate is just still rising, and that's what we've seen. The rising unemployment rate is fundamentally demand for workers not keeping up with labor supply.
So the risk is that the unemployment rate begins to tick higher towards 4.3% again. And that is a bigger red flag for the Fed, perhaps.
Yeah, absolutely. That's our forecast for today's number. We think we'll see a 4.3% unemployment rate again. That unemployment rate, there are a lot of issues in the payrolls data, the strikes and hurricanes. I think everyone knows that. That unemployment rate should be relatively clean of those effects. And it did rise, not on a rounded basis, but on an unrounded basis in October. So we are looking for that to increase again.
So what does that do to your call, which was originally 50 basis points for December? Are you still hanging on with fingernails to that? Or is that, no, Manus, there's a more realistic moment to review?
We'll see today's data, of course. But I do think the bar for them to be cutting in December, at least 25, is pretty low. Even if we get a very strong number today, I don't think that's enough to deter them. I think it would be more CPI next week. We'll see what we get there.
Do you need to break 300,000 to recalibrate a cut in December? Is that the kind of boundary?
I would think so, because there is this noisiness to the data, right? Is it going to be strikes and hurricanes? You can kind of look through that. The unemployment rate, I think, is the most important part of this number. But I really think it would only be surprisingly strong inflation next week, or CPI next week, that would do it.
Just had a conversation with Deutsche Bank, and they are saying you're going to get growthflation in 2025. Do you share? You don't share that kind of viewpoint, but then this comes back to, are you at odds with the market in terms of the scale of cuts that you're going to get in 2025?
Yeah, absolutely. I mean, obviously, we'll be very data dependent, just like the Fed will, and it's the employment data and the inflation data that matters most. But I do think, at least in the next 6 to 9 months, and we can question how incoming policies will impact the data later, but I think that's really second half of the year. But the first half of the year, there are a lot of reasons to think inflation is slowing. The labor market is loosening. We don't see pressures in home prices yet. Energy costs coming down. PMI prices are lower. So there are reasons to be encouraged that inflation is slowing.
And the consequence of all of that will have a knock-on effect on wages. If you think there's an incremental rise in unemployment rate going to 4.3%, what does that do to the wage situation?
Yeah, I mean, I think that wage pressure has slowed a lot, and that is evidence the labor market's loosened. We had a couple weeks ago the Q3 employment cost index reading. That's the Fed's preferred measure of wage growth. It looked pretty normal. It was the first print in a while that kind of looked like it could belong in 2019.
Let's pivot for a moment. We just finished a conversation with the German finance minister. Everybody's trying to work out how to deal with President-elect Donald Trump. Trudeau got on a plane, he came down. Strangely enough, you are the chief economist for Canada. I was looking at some of the BI research. Walmart, Kroger, Albertson, and all the grocers and potash makers would see their costs rise by 25% if we had the extreme of 25% tariff on goods from Canada. You don't see that actually happening, but that is your risk to all of your models next year, isn't it? It's the boomerang inflation.
Yeah, no, absolutely. I mean, all of those, all the tariff threats, not just for Canada, but, globally, are a really big uncertainty unknown right now. Certainly, tariffs would raise price level. Maybe if they're, to a large enough degree, it could become more actual inflationary. Inflation expectations would rise. And yeah, I'm not expecting to see 25% tariffs on Canada. I think there will be ways that we can avoid that.
Do you think Trudeau gets big carve-outs?
I do think, you know,
I presume oil is going to be a carve-out on the whole trade.
Yeah, absolutely. Obviously, the U.S. imports a lot of Canadian oil, and that would mean higher gas prices potentially. I don't think that would necessarily happen. We would get some of those carve-outs.
Tell me this: who's playing the sharpest game so far? Do you think Trudeau getting on a plane or Scheinbaum, you know, sending out messages?
I don't know. I'm not a political strategist on any means. I will let them do that.
Let them play out.
Yeah.
Okay, Veronica, great to see you. Let's see what the jobs report is. Veronica Clark there at 155,000 on the jobs report from Citi. The consensus is 220,000. Coming up, we have an exclusive conversation with the Bank of England MPC external member, Swati Dhingra. That is up next on Bloomberg Brief.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It is your Bloomberg Brief. I'm Manus Cranny here in New York. The Bank of England is heading into its quiet period before the last meeting of the year. Bloomberg's Lizzie Burden is sitting down with the MPC external member in London for an exclusive conversation. Lizzie, good morning.
Manus, thank you. Yes, I'm delighted to be joined by Swati Dhingra, the resident trade expert on the Bank of England's Monetary Policy Committee. So what a good time to talk to you. Thanks so much, Swati, for stopping by. Your colleague Megan Green said yesterday that Britain might end up having to choose between the US and the EU in a tariff Trump war. As the trade expert on the BOE, I wonder which one you'd pick.
I think we should do things that suit us economically the most. And that doesn't have to be picking sides always. Sometimes it's a matter of optimizing both. Broadly, though, I think this is going to be a really important moment for Britain to cooperate with other nations if the US is going to put up, trade barriers and there's going to be retaliatory action from everyone else. I think this is a really important moment to ensure that that happens, if it does happen, that it's an orderly fragmentation and not a disorderly fragmentation, because that would be bad for all of us, not just sort of Britain.
But I mean, in a world where Donald Trump's threatening the EU with tariffs, is this actually a moment where Brexit pays a dividend, that the UK can set its own trade policy?
We can set our own trade policy, but we're still very constrained by the kinds of policies that can be put in place. If suppose they start having factor content requirements about where you source your goods from, where you source your services from, then we're in the same position as many of the other nations. And in that sense, we don't have that much of an advantage about doing independent trade policy. That being said, I think this is going to be a testing moment for how well we can do our own trade policy. But we've got to remember that the way trade negotiations work, large trade partners tend to have much more bargaining power than small trade partners. And that's something we have to face up to.
I mean, even the CBI just this morning said if the UK engages in this tit for tat and strikes back with 10% retaliatory tariffs, it'd barely budge UK growth and inflation. Do you agree with that analysis?
I think broadly, the analysis is right that the direct exposure that we have to the US economy or to other parts that would be affected by the trade war is limited. But that's only the direct exposure. The indirect exposure, the macro effects that would play out, we are just as subject to it as any other nation. So just to give you an example, suppose the US does put on very high tariffs on certain products. That's going to put pressure on, say, the Chinese exporters or other exporters that are targeted by them to possibly lower their prices. In principle, we could be beneficiaries of that in terms of lower prices, but equally, if all of us start rushing to the same alternative exporters, if we want to move away from, say, Chinese exporters supplying us those products, then we all end up basically crowding to one source of supply, and we could end up in very much the same kind of world that we've seen in the past few years of supply chain disruptions.
But I mean, if you do see that diversion of cheap Chinese goods, doesn't that make your job easier? Would it mean more rate cuts next year from the BOE?
I think it might also come at a pretty substantial productivity loss. And in that case, I think, expecting businesses to rewire so quickly to a new world, that's asking a lot, thinking that that isn't going to impact productivity. So I don't think it necessarily is going to make my job easier. It might make my job easier for a month or 2 months, but not necessarily over a 2 or 3 year horizon.
So thinking about rate cuts next year, Andrew Bailey, the governor, said there'll be 4 quarter-point cuts if the forecast plays out. How many do you expect are going to be needed?
So my policy view has been that, gradual is good on most occasions for the reason that, unless there's some big shock happening, say the pandemic hits and you have to immediately rewire your monetary policy strategy, most of the times gradual is better because it gives people certainty to plan ahead.
But
so
not all the time?
Not all the time. There are shocks which come, and most of the decisions that we make, have to react to those very sudden shocks quite quickly. But the rest of the time, how much information gets revealed about the economy in a month is very limited. Most of the economic indicators that we look at are slow moving. Also, most of what we do in terms of our monetary policy actions takes time to have effect. So why would we do sudden changes as opposed to moving gradually and learning slowly and steadily about the economy? In my view, I think we have a very restrictive stance at the moment. That's weighing on living standards. That's weighing on even supply capacity and investments. And that's why we need to sort of start to take that away to some degree so that we start to get normalization back into the economy.
Yeah, I mean, if rate cuts are too gradual, would that be a policy error? Do you risk harming UK growth unnecessarily?
I think that's always been the biggest challenge that we've faced. We're not dealing with a situation where we think the economy is going to keep growing even if we have a restrictive stance. In this case, we're really sort of paying a price in terms of, consumption's been very weak. Businesses have been telling us for months that they've reduced investment for the reason, the broader macro outlook, as well as for the fact that it's becoming more expensive to finance those investments. So it's a combination of all of those factors, the weak consumption, the weak investment, and possible damage to supply capacity is what I would worry about, and that's why I think we should be easing policy more.
I'm kind of wondering, if you look back, do you think that the BOE didn't have to put rates so high to get inflation to target then?
So I think one way of thinking about that question is what happened in June 2023. Almost everybody was labeling the UK as an outlier. But if you looked more carefully at some of the other indicators, which are more indicative of pipeline cost pressures, like what are producers paying for buying from each other, or what are they paying for inputs, those numbers were in some cases even in negative territory. So those pipeline cost pressures, there was indication that they would start to ease, and we did see that happen. So by the time we got to November, we were saying that inflation was going to be now at about 3% or 3.4% if you went with the mean forecast at a rate of about 5% on bank rate. But that's not the world we're in now. We've actually seen wage pressures come down. We've seen services continuing to ease, albeit slowly, because these are slow-moving indicators. But broadly speaking, we are almost at half the point that we thought we would be at. So, bank rate has to ease as a result. Both of those things can't be consistent with each other.
In terms of the end point, the Fed and the ECB are having this big debate about the neutral rate. It seems, at least to some former BOE policymakers, to be something suppressed here in the UK. Where do you see the neutral rate for the Bank of England?
So I don't have particular reasons to disagree with the central view that most, say, forecasters, most market participants would take, which is somewhere in the range of 2.5% to 3.5%, with pretty large error bands to these things. Given those large error bands, I think it's very hard on a day-to-day basis when interest rates, have been at about 4.5–5% range to say that somehow we can take real serious indication from that neutral rate to set policy today. We're quite far away from that, so in that sense, it's not very informative of what I need to do tomorrow. But broadly speaking, I think the compelling arguments that I've heard about why the neutral rate would have risen are the ones around artificial intelligence, about need for greater public investment. I think those are plausible stories, but to a large degree, that's not where the reality of the UK is. That might be more true for the US, where we have seen AI boom much more than, say, in the UK. But at the end of the day, on a longer run sort of view, we're a small open economy. What happens in the US matters to us. So in that sense, I'm willing to buy the argument that the neutral rate has risen to some degree.
All right, Swati Dhingra, thank you so much for making time for us today ahead of that December meeting. Manus, back to you.
Lizzie, thank you. Great conversation. The debate is, of course, is high tide our rates. And in that conversation, she says rates are tight. It's the same debate here in the United States of America. Coming up, we discuss what to expect from, you got it, the jobs report, the last one of 2024, the guiding North Star for the Federal Reserve FOMC's rate decision in December. This is Bloomberg. Good morning.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Your Bloomberg Brief on Jobs Day. I'm Manish Cranny in New York. What have we got for you? It is the main event. 8:30 a.m., the jobs report will hit the tape. The surveillance team will take you through those. Then some economic data from the University of Michigan, the Consumer Sentiment Survey, 10 a.m. And it's a big day for Fed Speak as well. Bowman, Dady, Goolsbee, and Hammock all on deck post-jobs. So that is going to be interesting to see what their take is. Mike McKee is with me pre-jobs, post-jobs, and throughout the day. Good morning. The whisper number is now inched lower to 217. How much distortion is there in this non-farm payroll number? Because we've got ex-hurricanes, we've got strikers coming back. How distorted is this number going to be today?
Well, this number won't be as distorted as October, but because of October's distortions, it's going to be harder to read. We know there are about 38,000 jobs that were subtracted from manufacturing, largely because of the strikes against Boeing. So we can estimate that, and here are some numbers on what we are looking at least from the BLS, in terms of what we saw in job losses state by state. Now, the surveys are a little different, so you can't add them up and say this is exactly what it's going to be. But you can see sort of the impact that we're expecting. And it may not be from the hurricanes as bad as people anticipated. So we don't really know where we're going to come out, which is why the Fed is going to kind of ignore this headline number and look at unemployment instead.
And therein lies the point. I just had Veronica Clark from Citi in the seat. She's going for 4.3%. She says it's a slow dissipation in this economy and that the unemployment rate will rise to around 4.3%. But you sat in the seat and said, actually, that's not going to be that far from what the summary of economic projections were in September. So the trajectory is for rising unemployment.
The trajectory, at least according to the Fed, is for rising unemployment, and they've been surprised by the fact that it hasn't really gone up. In September, they predicted 4.4% by the end of the year. Now, that was September. We get in 2 weeks a new estimate. We'll see what that estimate turns out to be. But at this point, we're seeing unemployment better than they anticipated, so a little bit of a rise isn't going to bother them. Now, we're pretty evenly divided. Veronica's more on the high end.
She is.
We're pretty evenly divided among economists who say 4.2 or 4.1, and the difference really comes down to rounding in that 3 digits that we look at as economic nerds.
I mean, that I wouldn't be so self-flagellating. I mean, that's pretty tough, though. That just shows you how nuanced this forecasting is for the Fed if we're down to 3-digit rounding, both on PCE and on the unemployment numbers.
Well, the hard part is that we're looking for some sort of signal on the economy. And when you're looking at 3 digits, you're not getting a very strong signal one way or another. And I was talking to a senior Fed official this week who basically said, you know, even 4.2, 4.3, we are still in the range or below the range of full employment. So we're not really worried about that. It would take a sharp move in unemployment for them to start thinking that the labor market is weakening significantly.
Okay, Mike, well, we'll see what the numbers are when they hit the tape in just a little while, and you and the surveillance team will take us through all of that. Is Mike McKee on the jobs report. Some individual stocks, keep an eye on these. Ultra Beauty is extending its post-earnings surge. Strong sales, despite the analysts' previous concerns that the firm began the holiday discounts a little bit too early. You can never start too early with the discounts. Lululemon is continuing the gains, boosting the full-year outlook as the oversales, they blunted the U.S. softness. And Palantir, signs of a new partnership with Shield AI to develop AI-powered autonomous military aircraft. Just had a conversation with the German finance minister again, all around how do you build funds to assure the industry, the military industry, to continue to build. Those are the individual names. We're going to be all eyes down on the jobs report, as Mike says. What is the effect going to be? Here's your FX board for the moment. Again, sub 200,000, it's going to be seen as a reasonably weak number, but we are very long of the dollar. Positioning is quite extreme. Sterling, keep an eye on it, 127.60. We just had Bank of America, huge call from Bank of America. By the end of 2025, you're looking at 138 on cable, and 80 to the euro, the strongest since the Brexit vote. The Trump tariffs could push the UK to actually do more with Europe. Dollar yen, well, of course, if there's a little bit of a shift in the jobs report and a strong dollar, you can say hello to 151. Surveillance is up next. That's it for the brief team.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
The U.S. economy still has significant advantages versus the rest of the world.
The labor market has continuously been strong.
The data continues to show a resilient labor market as a theme.
The story of the labor market is that we're in a quiet period. How long that quiet period lasts is undetermined.
Last month for payrolls was an anomaly. We got to make sure we're still on a really good track here.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now as we come into Payrolls Friday after snapping a 4-day winning streak on the S&P 500. Your equity market is shaping up as follows. Equity futures on the S&P negative by 0.1%. On the NASDAQ, down about 0.1%. On the Russell, the small caps up by 0.1. The main event, 8:30 Eastern Time. The estimates look like this. The median, 220. The high, 284. The low is 150. The November jobs report just around the corner.
And it's so wide when you look at this range of estimates because people are concerned with what everyone's talking about, noisy, messy data. Neela Richardson talking about the stasis period, the fact that it's really going to be difficult to understand because there's a lot of hiring, not a ton of firing. It's basically stasis. And also the question is this environment of we had layoffs, we had strikes, we had a hurricane hit, and also a shorter retail space. So those short-term retail jobs right now because the holiday season is shorter. It's very difficult to understand what kind of number we're going to get.
Let's put some numbers on all of those themes. And Danny, welcome to the program, by the way. Lisa is on assignment through the morning. The snapback, the extent of the snapback, the size of the snapback. Bank of America putting some numbers on it. 60K from the hurricane. From the strikes, we're looking at around 40. So 100K is just a snapback from those two themes alone.
But that's why today's report is so important, because it carries the heft of two jobs data with it. Remember, we had that awful report last month of the negative 12,000, or 12,000 rather, negative private payrolls. BNP figures we could get a revision up to 100,000. So you have that at stake, and then you have this report at stake. In order to get a pause in December, you need a strong number to come in.
Payrolls 8:30 Eastern time, then it's on to CPI next Wednesday. Then the following week, the Federal Reserve, December 18th, for that last decision for 2024. Equity futures then pulling back just a touch, down by 1/10% on the S&P this morning. In the bond market, yields grinding just a little bit higher, up almost a basis point, but pretty steady over the last few days. The 10-year in and around 420, 418.57. Coming up in just a moment, we'll catch up with Laurie Calvasina of RBC, looking for the S&P 500 to end 2025 at 6,600. Ed Mills of Raymond James as Elon Musk meets with lawmakers, and Sarah House of Wells Fargo on the softening labour market. We begin this hour with the stock rally stalling as traders await US payrolls data at 8:30 Eastern time. Laurie Calvasina of RBC optimistic heading into the new year. Another year of solid economic and earnings growth, some political tailwinds, and some additional relief on inflation can keep stocks moving higher. We have started the new year with a year-end 2025 target of 6,600. Laurie joins us now for more. Laurie, good morning.
Thanks
Good
for
to see you.
having me.
Great to catch up. Some bulls out there. Wells Fargo 7007, Deutsche Bank 7K, BMO 6,700. Everyone's lining up to be pretty bullish into next year. You've been a little bit more cautious in the short term here. Can you give us some reasons as to why?
Yeah, and look, we thought we were starting to get a pullback a few weeks ago, and we were wrong on that. And we took another look at the seasonality data. And, stocks do tend to run in November and December. But if you look at the last few years, you tend to get some potholes in January and February. And some of my concerns I've actually heard echoed by investors over the past week. And really, if I look at valuations, I'm not necessarily saying we're sitting at like 2000 dot-com bubble type overvaluation, but we do look full on certain metrics, and we look a little bit over our skis on other metrics. If you look at sentiment data, the CFTC data is making brand new highs in terms of broader U.S. equity futures positioning and positioning in the S&P 500 contract specifically. And guess when the last time was that we did that? January 2018. So we, as we've been talking to clients, there's just a sense that there's a lot of froth in the market. We do think there are some political tailwinds next year. There might be some headwinds as well. We need some clarity on that. We're navigating in a lot of fog right now. And, if you look back to January 2018, we had just come off of the euphoria of tax reform that really propelled stocks higher in 2017. Now, that bill did not get passed until, I think, sometime around Christmas, but we pre-traded all the move, even though we didn't know what the tax rate was. It kept changing. And, as we sort of look at where we are now, we think just a lot of this good stuff has been pulled forward. And that's not to say we're not going to move higher next year. We do have a higher target, but we do think we need to have a little bit of a digestion period at some point.
We all read your research. There was a line from a note that you put out a number of weeks ago about our ability to absorb, our capacity to absorb bad news.
Yes.
What would you say bad news is? What does that look like in early next year?
So, one thing that's been coming up recently actually has nothing to do with the election, but just looking at earnings. And so if you think about the tone in the last few reporting seasons, it's been a bit more negative. You've seen margin expectations coming down. If you look at S&P 500 companies and the forecast for next year, the tone around costs has really, been, I wouldn't say it's dire, but it's been more concerned than what we had seen, kind of over the previous 4 to 6 quarters. And if you think about, sort of fundamentals, right? I mean, we've had this rock solid earnings environment. Companies have been navigating through everything. If we get to that year ahead outlook season in January, February, which coincides with that seasonal pothole, I think that's something that could rattle investors quite a bit. We got an earful the last few quarters about how business activity has been frozen. People were on hold because of the election. There's a big expectation that we're going to see this unleashing of activity. It's time to put up, right? It's time to see the evidence of this. So I think that's one big thing that actually has nothing to do really with the election itself and these tax policies, et cetera, that could rattle investors if it happens.
So there's plenty of things to be cautious about, but Laurie, the problem is that typically it works to fade the bears.
Yeah.
It doesn't usually work to fade the bulls. So what do you do in the meantime?
Look, I think we, look at what could any potential correction be. And in my mind, they're still limited to 5 to 10% type drawdowns. You get anything beyond 10%. Honestly, you don't get much between 10 and 15% in recent, kind of stock market history. You hit more than 10, you tend to go to 15 to 20. And those 15 to 20 type drawdowns are legitimate growth scares where we don't typically, sort of have a recession, but the fears that we're going to have some sort of growth slowdown are real. I don't see that in my, sort of investment horizon right now. So I do think any downside is going to be limited to that kind of range. So you do end up wanting to buy the dip, but you do kind of have to go through some stuff to get there.
I was also looking at some of the consensus calls when we figured that Trump would be the next president of the United States. We got that, and things haven't quite played out how we expected. Mag 7's outperforming the S&P. Growth is beating value. German stocks are doing well. Mexican stocks are hanging in there. What among that looks mispriced? Is something gone wrong?
So, I think to a certain extent, if you look at pricing in the market and some of these higher level things, and I think there are some exceptions like materials and healthcare, but generally markets are hoping for the best. There is some preparation for the worst, right? When you see things like healthcare and materials having really underperformed post-election. But I think, if you think about financials, for example, right, that's a Trump trade, very consensus. That one's been working and it's pretty clean and it's still got some room on valuation. I think other things have had some wrinkles. And I will tell you, when I talk to people who are more constructive, and that's not really the tone I'm sensing the last few days, but if I think back the last couple weeks and, hear the more constructive tone, it's, well, this bad stuff isn't going to happen. We think the risks of that are low. We think that this is just bluster. We think that this is just posturing. And so I do think that that optimism is filtering in a lot of trades.
Is that going to be the catalyst for the pullback when potentially the bad stuff becomes reality?
I think, and look, I think I hesitate, I think good stuff and bad stuff is an easy way to think about it. Some of the stuff is just more complicated, right? And, one example that comes up, and you and I have talked a lot about this, Anne-Marie, since we went to that Trump speech, but the whole idea of the 15% corporate tax rate deduction, that the idea that there may be some conditions on that, it seems like it's finally starting to filter out. But, I do think there's, I'm seeing a lot of stuff floating around with this 15% rate. I'm like, well, it might be more complicated than that. People just haven't really been paying attention and aren't aware. And when that clarity comes, if that's what in fact ends up happening, it could suck some of the enthusiasm out, even though it might not be bad policy.
Right, so the 15%, what you're talking about, has an asterisk and fine print next to it, has to be made in the United States, and likely would come after there's going to be some level of tariffs, according to President-elect Trump. And the sequencing we're hearing and reading the tea leaves out of Washington is that it's immigration bill and tariffs, and then tax cuts. So early next year, are companies going to have to start pricing in what higher tariffs might mean?
It's interesting because I've been, really reading very closely the company commentary and earnings calls. We haven't had a ton, but I've also been reading conference commentaries on anything to do with the election. And a lot of the discussion has been tariff. But generally, I would say up until we sort of saw that, kind of Mexico-Canada announcement made, it was a situation where companies were like, well, we navigated really well through the China tariffs. We've reduced our China footprint. We've diversified our supply chains. Don't worry, we can get through this. And oh, by the way, we're going to pass everything along to the customer, so it's not going to impact our margins. We're going to have to see if that changes now that, sort of more broad-based tariffs have been introduced. But I think that's another misperception, is that these companies have just been going out talking about what happened in Trump version 1, and that is not the playbook this time around, if you actually listen to what he's been saying.
This line of thinking got some pushback yesterday from Jim Caron of Morgan Stanley, who brought up the issue of tariffs and said maybe people view them as a good thing. Domestically, there could be some winners here that investors are excited about. Do you see anything in that?
Look, it comes up in my conversations on small caps and on the industrials in particular, that if you're going to reinvigorate domestic manufacturing, is that going to bring, some good stuff? And then you can sort of extrapolate that to the regional banks, which are going to have more regional footprints in terms of areas, like the Midwest and the Southeast, where you might have some of this manufacturing being made. I would say, I think that's all good and well in the long term, but it does take time to readjust supply chains. And as I've been reading some of these commentaries from companies, and they're talking about, well, we moved out of China into Mexico into Southeast Asia and yada, yada, yada. I'm not hearing a whole lot of we've moved to the U.S. So even if it ends up being positive longer term, there is still a shorter term period of disruption that could potentially impact demand, margins, and earnings. And when you're in an environment where there's not a lot of room for multiple expansion, earnings are a bigger driver of stock prices in the short term.
There is a massive marketing push right now. John Deere is running a commercial campaign at the moment talking about their presence in, guess where, in America. How many people we employ, how how important America is to us. You're going to see a series of commercials like that from various companies over the next few years.
They want to send those signals out, and they want to make sure the optics are showing down in Washington, D.C. that these companies are on board. But to that point on tariffs, Kevin Gordon wrote in and said what happened in Trump 1.0, we didn't see a manufacturing boost in the U.S. due to any kind of nearshoring. So to Lori's point, they might be going elsewhere in other Asian countries. She's not hearing a whole lot of the manufacturing moving back to USA.
Lori, it's good to see you. Great to catch up.
Thanks
for being with us. Lori Cavacina there of RBC. Equity futures right now on the S&P pulling back by about 0.1% on this Payrolls Friday. With an update on stories elsewhere this morning with your Bloomberg brief, here's Yahara Hakes. Hey, Yahara.
Hi, John. The manhunt continues for the suspected shooter of United Healthcare CEO Brian Thompson. Bullet casings found at the scene were inscribed with the words delay and depose. Police saying the gunman arrived in Manhattan on November 29th at Port Authority and used a fake New Jersey ID to book a hostel. Thompson's wife told NBC he had received some past threats, potentially related to insurance denials. Meanwhile, on Capitol Hill, Elon Musk and Vivek Ramaswamy met with lawmakers yesterday to explain how they plan to slash at least $2 trillion from the federal budget. They also attended a session with House Republicans. All this a part of their advisory commission coined Department of Government Efficiency, also referred to as DOGE. Their target to cut $2 trillion would be the largest austerity measure in the U.S. since the end of World War II. And Donald Trump has tapped venture capitalist David Sachs to serve as his AI and crypto czar. Trump also announcing Sachs will lead the Presidential Council of Advisors for Science and Technology. Sachs has become one of Trump's biggest Silicon Valley supporters. Sachs also has ties to Vice President-elect J.D. Vance, who also worked in venture capital before turning to politics. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, Doge takes over Washington.
This is an important day. It's the beginning of a journey. You've heard what DOGE is all about, the Department of Government Efficiency. We believe it's an historic moment for the country, and these two gentlemen are going to help navigate through this exciting new day.
That conversation up next, live from New York City this morning. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
The outlook into next year is so different compared to the outlook into this year. Last year, 4,800 was the average target on the street coming into 2024 for year end, and here we are north of 6K. Going into next year, 7K over at Wells Fargo, likewise over at Deutsche Bank, 6,700 at BMO, just caught up with Laurie Calvasina, 6,600 over at RBC. Things are pretty bullish into next year. Equity futures taking a breather. We're down 1/10% on the S&P. In the bond market, things have stabilized just a touch. Yields are higher by a single basis point. The 10-year 4.1857. Out of surveillance this morning, Doge takes over Washington.
This is an important day. It's the beginning of a journey. You've heard what Doge is all about, the Department of Government Efficiency. It's a new thing, and this is a new day in Washington and a new day in America. The taxpayers deserve better. They deserve a more responsive government, a more efficient government, one that is leaner and more focused on its primary objectives. And that's the opportunity that we have here now. We believe it's an historic moment for the country, and these two gentlemen are going to help navigate through this exciting new day.
So here's the latest this morning. Elon Musk and Vivek Ramaswamy meeting with top Republicans on Capitol Hill and outlining plans to slash government spending. Ed Mills of Raymond James writing, as much as Elon Musk and Vivek want to work outside of the traditional DC process, the reality is that they will need congressional support if they want to enact key items of their agenda. Ed joins us now for more. Ed, welcome to the program. How much support do they have on Capitol Hill?
I think they have a lot of support within the Republican caucus. The problem is there's not enough Republicans to get to a majority to pass this in the House. Right now, we're looking at the beginning of the year next year, 217 to 215. You lose one Republican, you can't get this through the House. Every member of the House of Representatives on the Republican side is going to be Joe Manchin. On the Senate side, almost everything requires 60 votes. You're going to need 7 Democrats. You're not going to get 7 Democrats to support some of these things. You might be able to get something through reconciliation, but when you have these small margins, John, it's going to be very difficult to get this done. And when you heard from some of the most conservative lawmakers yesterday, they said the threat comes from within that room. They weren't referring to the House as a whole. They were referring to their fellow Republicans, because traditionally when they have big opportunities to slash the budget, what they will say is that they get 20, 30 votes. They're nowhere close to the 217, 218 to get to that majority.
Everyone's going to be a king on Capitol Hill when it comes to next year, Ed. Is that why, not just talking about slashing money and what Doge wants to do, but the idea of the tax bill, is that why so many people are saying when you look at the sequencing of these Trump policies, you have to push that out to the end of next year?
Yeah, Anne-Marie, I think you're right. You're going to have some special elections that could potentially add to that majority, but it's still only going to be a couple of seat majority. When we look at the tax bill next year, it's a really big price tag. If you want to bring down that price tag, there's some significant kind of concessions that are going to be made. Historically, it's easier to give additional spending than to cut. But then you run against the opposition of the hardliners who want to support Doge. I do think that there probably is going to be some level of a Doge package tied to those tax bills trying to help pay for that, because when you're weighing this idea of really unpopular or hard to defend government programs versus tax cuts for the American people, that's where the Republican Party goes back to their traditional roots of when you're explaining you're losing. So if you're explaining why you didn't support a tax cut, that's a very difficult position for you in a Republican primary. And Elon Musk is more than happy to challenge you and give money to your kind of primary opponent. So you probably still get that package, Anne-Marie, but that fragile flower of consensus is going to be very difficult to hold together.
Well, we know what some of the provisions might be in the tax bill. Donald Trump talked about them endlessly on the campaign. What do you think is going to be included when it comes to Dogifying the government? What are the cuts that we can actually see make it into legislation?
I think they're going to be on the edges, Anne-Marie. We're going to see a series of things that have been outlined previously, difficult to defend programs. What we've heard is that they want to cut $2 trillion annually from the federal budget. You would have to do a series of entitlement reforms to do that. So I think Medicaid is most at risk in that conversation. Some redetermination in terms of who gets it, more enforcement on kind of the recipients, kind of not too dissimilar to the provisions that Democrats added into the reconciliation bill, giving more money to the IRS to crack down on waste, fraud, and abuse within kind of taxpayers. They're going to say this is waste, fraud, and abuse on entitlement programs. I think it's very difficult to do multiple things at the same time. Entitlement reform might be a step too far, but if you want to get those savings, you're going to have to tackle that, with Medicaid being the most likely area that they try to tackle.
Ed, you mentioned something there that I want to dig into more, this idea that Elon Musk could fund competitors to those in the House and the Senate if they don't fall into line. We learned with filings yesterday that Musk spent $250 million on Trump's campaign. How big of a threat is that? What is Musk's power to make sure that Congress people fall in line with Trump?
For Republicans, the biggest threat generally is a primary opponent. And when you have someone who was giving $250 million, as you said, Danny, was giving $1 million away in a sweepstakes, a competitive primary is about $1 million. And so to have that outside money is going to be a huge pressure. One of the questions that I have is there are some states, especially in California, where there are still plenty of Republicans in Congress where a kind of two-person kind of advancement primaries are not as impactful. And so it would help with a lot of members of Congress getting him over the edge. But there are two members who voted in favor of the impeachment of Donald Trump who's returned. There are a handful of members from California who don't have to worry about primaries. They actually have to worry about not going too far to the right. So the math is going to have to math, and it's very difficult to get that done, Danny.
Does that then change the dynamic of the slim majority we've been talking about? Does it look a little less slim with Elon Musk acting as cop?
It's going to put pressure. At the end of the day, I go back to that when you're explaining you're losing. So as a Republican, you generally have to vote in favor of tax cuts. Now, the big question is how much does that cost? It looks like it's going to be $4.7 trillion just to keep current law. You know, Anne-Marie asked about all of the promises on the campaign trail: no tax on Social Security, no tax on tips, no tax on overtime, doing something with SALT. That could balloon that up to $10 trillion. You're not going to have a bill that big. I think that the over-under in terms of how much we'll add to the deficit through taxes over the next 10 years is about $3 trillion. So you'll have some of those offsets. But building that coalition, we have too many members on Capitol Hill where perfect is the enemy of good. And the more you have as perfect as the enemy of good, the harder it is to actually get this package. So I think the final thing I'd say there is you have Senate Majority Leader Thune saying he wants to aggressively move this out, maybe do 2 reconciliation packages. I'd say I'll take the over on that timing and I'll take the under on that number.
Ed, you're having conversations with market participants every single day. Do you get the sense that they're underplaying how difficult it will be to execute on this front?
John, I think it's a good question. I think what I've seen is people are just taking a step back, taking it all in, not getting too swayed too far on any one headline, because that most market participants I've talked to lived through Trump 1.0. They recognize that there is a certain swing and kind of unpredictability to this. They keep the North Star of it is still more likely than not that we extend out the debt limit. It's more likely than not we extend out some of these taxes. We probably get some level of change through DOGE. If I had to pick something that is more likely than not, there is deregulation. You can do that without Congress. The courts have really opened that up. So that's what they're focused on. As we get closer, that's where we hit the return to volatility. That's probably one of the big themes for next year.
Ed, appreciate your time, sir. Thank you, as always. Ed Mills there of Raymond James. Started that conversation on the DOGE effort. Important to point out that this has got bipartisan support in some places, the likes of Bernie Sanders supporting certain elements of it.
Yeah, theirs does. And to even Ed's point, when you're talking about some of these cuts on the margins, there's even been Democrats who have talked about some of those cuts and some of those reforms. But the math has to math, and that's the problem here. And Libby Cantrell put out a note earlier in the week that said, historically, this will be the Republicans' smallest majority ever, and the second only smallest majority in the House historically. For Republicans, though, they're first. Every vote counts, and to Ed's point, everyone's going to be Joe Manchin, but on the other side of Congress.
Ed talked about size. To extend the Tax Cut and Jobs Act of all those years ago, you're pushing $5 trillion. just for that alone, before you get into all the other stuff.
Just to keep status quo. And then you have to start adding on the promises we heard on the campaign trail. And I find the one that's most interesting is cutting on Social Security taxes. Do you know why? Because at the same time, you're trying to maybe go through Medicare, Social Security, and cut some of the fat that's in these entitlement programs. At the same time, you're saying, well, we're also going to cut the taxes on them. There's going to be a lot of debates on this.
It's going to be a busy 2025. Equity futures right now this morning, we're down by about 0.1% on this Payrolls Friday. The number we're looking for in our survey, about 220K. I'm next on the programme, Sucharita Kodali of Forrester Research on earnings from Lululemon.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Snapper gave 4-day winning streak on the S&P 500 in yesterday's session and spoiling the week so far, just back-to-back all-time highs over the last 3 sessions so far this week. Just a small move lower. We're down again by 0.1% on the S&P 500. On the Nasdaq 100, we're softer also by 0.1. In the bond market, we've now gone about 2 weeks without the 2-year yield climbing. We're up by a single basis point at the moment, basically unchanged on the week so far, up by 2 at the front end to 416.42 on a 10-year 418.38, up a single basis point there. All of that, Danny, going into the payrolls report in about 2 hours from now. The estimate we're looking for is 220K.
I just wonder if the risks going into this are asymmetric, because you need a strong jobs report in order to get a pause. It's an ingredient for it, but it's not the thing that forces it. The thing that forces a pause is CPI next week, is inflation. Perhaps the bigger risk is a weak unemployment report, where you need a Fed who all of a sudden gets worried about jobs again, needs to cut ahead of a 2025 that could be very well be inflationary.
Andrew Honhorst of Citi saying something similar. Markets are underpricing downside risk to jobs data, and the Fed's asymmetrically dovish reaction function. More on that a little bit later. I want to turn to Europe. Just take a look at this. The news isn't great out of France, but the market is starting to stabilize. The euro against the dollar just about unchanged, 105.83. And 10-year yields, Danny, are down on the week. In France, started the week around about 290, 292. We're down to 287.
It's a huge vote in favor of Le Pen. John, you've always been great in saying no one wants to be the candidate that upsets the bond market. The fact that Le Pen can come in, essentially cause the toppling of the French government, and bond yields barely budge, it really shows how calculated she was in this. She doesn't want to be the person kicked out by the bond vigilantes. Instead, she goes in, she talks to Francine Lacqua about being able to pass a budget. She doesn't call for Macron to step down. She's striking that careful balance of getting her way and having the markets on her side.
A Liz Truss reputation isn't one you want to carry into an election. I think it's fair to say. We can leave that there. That's the latest out of France. Under surveillance this morning, the search for United Health Insurance chief Brian Thompson's killer entering a third day. Bloomberg learning the suspect had checked into a hostel on the Upper West Side using a fake New Jersey driver's license just days before the shooting.
So we have this new photo, and this photo can now be used for facial recognition technology, and potentially they are closer to finding out who this individual was. The human instinct of the woman who checked in this individual, I think, is fascinating. Former NYPD Deputy Commissioner for Intelligence and Counterterrorism had this to say. They were having a flirtatious moment. He pulls down his mask, gives a big smile, and that one informal moment between these two human beings remains at this moment the most significant clue to date in this entire case, and I think that's fascinating.
I have to say, one of the most shocking things I've seen is just the vitriol online. I think it's perhaps always a mistake to look on the internet after things like this, but kind of the lack of sympathy and the discontent from people, which it should go without saying, but I'll say it anyway, is never an excuse for violence. But it's percolating in really interesting ways. Anthem Blue Cross Blue Shield, for example, had a decision last month where basically in Connecticut, New York, Missouri, they would stop paying for insurance depending on how long you were under anesthesia. That happened last month. People were upset at the time, but it reached a new fever pitch yesterday. And then Anthem Blue Cross Blue Shield, according to Connecticut officials, pulled back on that decision, again, because this discontent is really bubbling up in the aftermath of this.
And I think we can all agree this certainly isn't the way to deal with it. Just shocking what's happened in New York City over the last few days. Let's turn to this story. President-elect Donald Trump naming venture capitalist David Sachs as White House AI and crypto czar. Sachs played a key role in bolstering Trump's fundraising among tech industry donors. Trump saying he'll also lead the Presidential Council of Advisors for Science and Technology.
So he's part of the PayPal mafia, as they call it, the likes of Elon Musk, Reid Hoffman, Peter Thiel. What's interesting about this is it's similar to Doge. I think everyone needs to take all of this with a grain of salt. It is an advisory position. Kraft Ventures, his VC firm, says he is not leaving. It is an advisory position. So yes, will he be involved advising the president? Yes. Do you see the crypto community very excited about this individual, thinking that potentially gives them a direct line to the President of the United States, but at the same time, it doesn't have the same weight as, say, a special advisor like Peter Navarro or someone that is actually in the cabinet.
Right, well, he literally can't. He talked about on the All In podcast how he has a key man risk clause in his contract for his company, and he can't take on a full-time job in the government. I think it does, though, underscore kind of the small tech influence that's happening in D.C. right now. So you have David Sachs being added to the other VC influences. Mark Andreessen, according to the FT, is leading some of the search for the talent for the Doge outside agency, not an internal one, much like this one. Exactly, the task force. But still, you have all these people who are champions of small tech, not big tech, entering the government.
You've got to embrace success. I've always said that the secret to American success is the embrace of success. In Europe, there's always been this weird thing where they're sort of like, oh, success, regulate that, find that person. In America, I've always thought that's the secret ingredient, and these are successful individuals that should have some influence on the course of this country. A top court in Washington set to rule on TikTok's upcoming U.S. ban today. This coming after President Biden signed a bipartisan bill that could ban the app nationwide starting in January. TikTok arguing the ban violates the First Amendment of the U.S. Constitution.
So regardless of what we hear from the court, we need to remember the legal saga is likely going to continue. Regardless, there's likely going to be an appeal. When they talk about this idea of the First Amendment and free speech, I think back to what FCC Commissioner Brendan Carr said on this program a few months ago, who is now tapped to actually lead the commission as chair. He said it is not a content issue. It's the way the content is getting to people. And he called it a national security threat. And this is someone who's close to the President of the United States, incoming President of the United States-elect Donald Trump. So regardless of what happens, there's going to be an appeal. But the timeline is very short. We have till the end of January for them to divest, or there potentially is going to be this ban.
President-elect Donald Trump said he was against banning TikTok. Originally, he was against banning TikTok. I say originally because he did want to ban TikTok, and now he's against banning TikTok because of Meta and Mark Zuckerberg. And Meta this week has gone on a bit of a charm offensive to say that maybe we over-moderated things. We'd like Mark Zuckerberg to have some influence on what's happening. I just wonder whether that can really change the course of this story.
And he also made a pilgrimage to Mar-a-Lago to sit down with Trump. So you do see a shift in tone from all of these tech individuals in terms of wanting to cozy up to President-elect. I'm not sure if that's going to change this exactly, because there's another wrinkle, Jonathan, and that's one of the biggest donors to President Trump. And that's Jeff Yass, and he has a huge stake in TikTok.
But even so, what can Trump do? The deadline is January 19th, a day before the inauguration. What power does Trump have? I guess he could kind of get out the sharp elbows and get Congress to overturn this, but he'd need bipartisan support. And guess what? And where the bipartisan support was? It was for enacting this bill to ban TikTok. So I'm just not sure how much power Trump actually has in this.
The clock is ticking, that's for sure. Let's turn to retail. Lululemon upping its full-year outlook thanks to strong sales in international markets. The company seeing flat sales in the United States last quarter, but a 39% rise in China. Sucharita Gadali of Forrester saying athletic gear still seems to be strong. The affluent, fitness-focused consumer is still spending. Sucharita joins us now for more. Sucharita, welcome to the program. What is Lulu getting right this time?
Well, I think a lot of this is just the entire sector is doing really, really well. When you look at the numbers for other companies that are selling similar products, whether it's On Running or you're looking at Dick's Sporting Goods, they are doing incredibly well as well. So the shopper is just spending in this category. Lulu has been performing incredibly well for years. And this year it was more just because of some lower guidance that some of the numbers are soft. And it's been underperforming the market. But the story is that their overall top line has been strong. And some of these international sales, as you point out, have been a big driver in its success, which is interesting because that is perhaps one of the areas where it may have some softness in the future if tariffs actually become more prevalent.
Well, Sucharita, it's interesting also because so many have struggled in international markets, particularly in China. What underpins that success that they're having?
Yeah, it could. A lot of it is likely just newness to the Chinese consumer. Chinese consumers, like many consumers around the world, are often interested in purchasing whatever is on trend, whatever is new. They're as influenced by social media as consumers anywhere in the world. And I think that Lulu has had a strong formula for success. And that has been an enormous driver. In the U.S., it's interesting that some of these numbers were softer in Q3, but I expect in the next quarter, particularly as that will be the holiday numbers, it should be even stronger.
Well, Sucharita, I might be revealing too much about my social media habits, but all over TikTok, Instagram, I see all these influencers saying, hey, these pair of sweatpants from Lululemon, you can get the exact same thing on Amazon for a third of the cost. What is the bigger threat to Lulu? Is it the Alo Yoga, the Vioris, the high ends of the world, or is it Amazon and fast fashion?
Well, that's a great question because the biggest threat to Lulu is likely that competition where they could become the new middle. And that's absolutely where they don't want to be. They need to continue preserving their premium positioning. They need to be very, very careful about promotions and discounting because you're absolutely right. There are competitive threats that are at the high end and they're absolutely the knockoffs at the low end. And you don't want to be either. You need to make sure that every part of the brand, the logo, all of those elements are preserved and protected, and that discounting doesn't become too prevalent in its business model.
How are they on that front, on inventories and fighting off discounting, Sucharita? Are they doing a good job there to fend off falling into the middle?
It seems at the moment that they are fairly strong. This is a company that seems to have pricing power and seems to be able to get away with minimal discounting. You don't necessarily see the huge Cyber Week and Black Friday promotions that other brands, the deep discounts that other brands are forced to reckon with. They did have an inventory situation earlier in the year. It seems like it has stabilized a bit, so it appears to have they seem to be in a better position going into Q4, and I expect that will also carry through 2025.
Sucharita, when it comes to the international business, analysts were noting that it was the leggings category that was seen as strength for the first time in a while. But I thought the Lulu problem was the fact that they were leaning too much into tight-fitting clothing and had to go into a more baggy look. Which one is it?
Well, a lot of this is also very dependent on regional preferences too. So the challenges are that certainly that they're going to have to figure out from their merchandising standpoint, from their product development standpoint, what is appropriate in which markets where, which colors, which styles are going to resonate more with shoppers. A lot of that is going to be influenced by social media. Much of it is going to be influenced by even store associates in stores. So a lot of this is going to fluctuate. That is one of the challenges of being a fashion retailer. But also what Lulu has is the ability to actually shape what shoppers want by what it has in the store and what it's positioning as what is on trend at any given moment.
When you look at the U.S. and also consumers around the world, which do you see right now in terms of who is the most picky? Where's the pickiest consumer?
That's a great question, because consumers everywhere are pretty picky. And this is one of the things that we are certainly seeing is that certainly at the low end, consumers are incredibly fickle because they're the most economically distressed. But even at the high end, we see a lot of fickleness because those consumers, while they're still flush with cash, they have so much choice, and you see that in some of those U.S. numbers, and that's absolutely an issue that every business that is trying to attract higher end customers has to face.
Sucharita, good to catch up, as always. Sucharita Kodali there of Forrester Research. Lulu is up in a pre-market by more than 9%. It has been such a mixed month for consumer-facing companies in America. JetBlue, Southwest, American Airlines, all solid. Target, Foot Locker, not so much. Lulu doing better than good. It's been really mixed, hasn't it, the last few weeks?
But it leads everyone to just say, okay, it's a more choosy consumer. It's the bifurcation. It's the K-shaped economy. But how can you say that when it's someone like Lululemon that does cost more, is more upscale? Maybe it does come back to the picky consumer, but it just shows you can't just assume everybody's flush with cash and going to buy things. You need an actual strategy now.
It feels like the excuse at the moment when things go wrong. You say the consumer is choiceful.
Yes.
Picky, choosy, in a soft part that has nothing to do with us.
Well, you need to have the right choices for them. You can't say just a consumer is picky and we're living through these ups and downs and that's why it's happening right now. If you don't have the strategy, that's why you see all these companies, this extreme CEO turnover and people bringing back old people back into the fore to get that culture back. Something is happening now.
What I found so interesting about Lululemon was the international business doing well and the leggings are back in style. When, Jonathan, I think you're the one that pointed out to me that Lulu's problem was the fact that they didn't have this baggier fit that some other brands like Vuori were starting to sport.
Are we moving back? Is that what's happening now?
I guess. It's supposed to be for yoga, so it makes sense.
Lulu right now is up by a little more than 9% in a pre-market. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. French President Emmanuel Macron is meeting with key politicians today as he looks to piece together a new administration. In an address to the nation yesterday, Macron vowing to serve the remainder of his term and saying he will appoint a new premier in the coming days after a vote of no confidence in the National Assembly ousted Michael Barnier. The new government will look to approve a budget before mid-December. Meanwhile, California's largest earthquake in years struck off the state's far northern coast yesterday, briefly triggering a tsunami warning and causing a wave of aftershocks. The magnitude 7.0 earthquake hit some 50 miles offshore and caused minimal damage, but was felt from Oregon all the way down to Sacramento. Emergency tsunami alerts were activated on mobile phones throughout San Francisco, leading to some evacuations, but the warning was lifted within an hour. And the world's most expensive dinosaur has a new home. The 150-million-year-old Stegosaurus, also known as Apex, was unveiled yesterday at the Natural History Museum in New York. The skeleton was purchased for a record $44.6 million by none other than billionaire Ken Griffin at a Sotheby's auction over the summer. Apex is expected to be on view for 4 years. That's your Bloomberg Brief. John?
Yeah, Harry, thank you. You've all seen that meme. I wouldn't tell anyone I'd won the lottery, but there would be signs. This is like the 8-year-old version of that. You want to know what FU money is? It's dinosaur money.
It should be in his house, though, if it's actually that. He should have built like a second house just to house the dinosaur.
It's 11 feet tall and 27 feet nose to tail, so that's probably why he needs a museum. But actually, I'm excited because I want to go see it.
Amazing. Up next on the program, the November jobs report.
Even a number 220,000, I don't think that's going to be enough to deter the Fed from pushing through that December rate cut.
That conversation up next. Live from New York, this is Bloomberg.
About artificial intelligence. Is artificial intelligence going to enable you and others to say we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Equities at the moment just a little bit softer. We're down by a little more than 0.1%. Bond yields a little bit higher, up a single basis point. The 10-year 4.1876. Under surveillance this morning, the November jobs report.
Looking out to Friday's non-farm payroll reports, the strength is going to be outsized, or at least we expect that. But that's going to be offsetting the weakness that we saw the month prior. So even a number 220,000, I don't think that's going to be enough to deter the Fed from pushing through that December rate cut.
So here's the latest this morning. The labour market in focus as non-farm payrolls drop at 8:30 Eastern Time. Economists expecting 220,000 jobs added and unemployment to hold steady. Sarah House of Wells Fargo writing, through the monthly swings of non-farm payrolls, we expect the November employment report to reiterate that while the labour market remains solid, in an absolute sense, the softening trend in employment conditions has yet to cease. Sarah joins us now for more. Sarah, welcome to the programme. Identify that weakness for us this morning. What does that look like?
Yeah, so I think it's really going to be looking at what's the recent trend in payroll growth. So we know we're going to get a bounce back from October from strike effects, as well as we think from some of the disruption caused by hurricanes. But we could also potentially get some meaningful revisions given how low the survey response rate was last month. And so we're really looking at what does the overall recent trend say about job growth. So prior to October, we were running around 150,000. Does that hold? Or do we see that sink lower?
Sarah, do you believe we could get a post-election bounce? Consumer confidence is up. Business optimism is rising based on what we heard from the Beige Book early this week. Is there something to be said about confidence picking up and hiring starting to follow?
So I don't think we'd see that in the November jobs numbers. I think that's too soon. We did see a little bit of that. If you look at the NFIB survey, the employment components for November came out yesterday, and we did see about a 3-point bounce in terms of hiring plans. And so we saw something similar following the first election of President Trump in 2016, although the bounce we saw in yesterday's numbers, it was smaller than what we saw in the 2016 period. So I think there's maybe a little bit to that in terms of increased confidence. I think just increased optimism, animal spirits, but I think importantly, the ceiling to that seems to be a little bit lower than maybe what we've seen previously.
In the meantime, Sarah, the words you've heard from Fed speakers and Powell himself is not about a weak labor market anymore. That narrative has shifted. It's about the strength in the labor market, and as Powell said, the ability to be cautious with rate cuts because of that. Is there a number we could get today that would throw that all away, that gets Fed speakers talking yet again about the risks to this labor market?
Yeah, so I think if you saw a clearly below consensus print, which would indicate that it wasn't so much the storm effects, that we're seeing more broad-based weakness. So this is similar in many ways to what we saw in the state employment level data, where you saw 29 states actually decline in October. So I think there are hints of this, that the labor market, while it's softened, we don't think that we've seen the end of that downward trend quite yet. And so I think if you were to see that further decelerate, if you saw the unemployment rate go up, I think you could get more concern about where the labor market is headed, and that the past few months' data just hasn't all been noise around the strikes and hurricanes.
How toxic of a mix could that be if you have a freshly weakening labor market, you have everybody all bulled up in assets at record highs, and you have the threat of inflation in 2025 from fiscal policy?
Well, I think the important thing is that the Fed does still have room to cut. And so when you look at where the policy rate is versus where even the highest estimate of where neutral is, we're still restrictive. And so I think there's room for the Fed to give a little bit more in terms of not so much accommodation, but at least dial back that level of restrictiveness, where you're not fully, I think, moving to an accommodative stance that could potentially fuel some of the inflation fears. But I think give a little bit more of a floor to the labor market.
So what does that mean for 2025? Danny's talking about the new introduction of fresh policies out of a new administration, a sweep through Congress from Republicans, but at the same time, you're saying the Fed is they're still restrictive, so we're seeing cuts next year. How many do you think?
Yeah, so we're still looking for a 25 basis point cut at the December meeting, and then probably another 75 basis points of cuts through 2025, although we think the cadence of that is going to move slower, probably more to an every other meeting basis. But I think that fits with the idea that, again, policy, at least in the view of Fed officials, still seems to be restrictive. So even if you get some tariffs, for example, well, that would be inflationary, that's also probably going to dent growth. And so that's where this labor market conversation comes back in. So there's two mandates, of course, that the Fed is trying to protect. And if you see that weaker growth, that is going to be more of a challenge to the labor market.
Sarah, just quickly, is there a number that would put December very much on ice? What is it, 350? Is it that high?
I think it's at least 300 with probably some upward revisions to prior months, because that's what you're going to need to get that trend notably above where it has been around 150. So at least 300 and probably then some with revisions.
Sarah, thank you. Appreciate it. Sarah House there of Wells Fargo. Big takeaway from the Fed speak we've had so far this week actually came from Governor Waller, for me at least, and not from the Federal Reserve Chair, Jay Powell. When Governor Waller said this, Danny, there's still some distance to go in reducing the policy rate to neutral. They believe they've got a lot of work still to do.
They think they're sufficiently restrictive or too restrictive. And I go back to numbers like the Atlanta Now GDP tracker. That's at 3.3%. It's crazy to think that we're restrictive right now and we're still running so hot in this economy. But that's why this number, maybe not the most important, maybe it's CPI, PPI, next week that shows that if inflation is too hot, that the Fed can't continue their cutting cycle, at least for now.
There's a man joining us in the next hour who shares the opinion that maybe we are not sufficiently restrictive. He's joining us in just a moment. Coming up, we'll catch up with Priya Misra of JP Morgan, former National Economic Council Deputy Director Everett Eisenstadt, John Murphy of Bank of America, and that man is Thorsten Slock of Apollo. He joins us just in a moment. Equity futures on the S&P 500 just a little bit softer. Going into the big one, payrolls just around the corner. The second hour of Bloomberg Surveillance up next.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We do think that the Fed is going to cut here in December, but we think that next year's cuts are a bit in jeopardy.
The data coming out Friday could make the case, if it comes in strong, that they don't have to go in December.
Even a number 220,000, I don't think that's going to be enough to deter the Fed from pushing through that December rate cut.
The real question is, what is the underlying trend? What we're projecting is really the rebound from the prior months.
If you give me 350 headline payrolls and a drop in the unemployment rate, then the question becomes, is neutral in fact higher?
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
So the big one. Payrolls just around the corner, 90 minutes away. The scores going into it look like this. Equity futures on the S&P just a little bit softer. We're down 0.1% on the Nasdaq 100. Similar move, no real drama here on the Nasdaq 100. We're down by 0.07. Basically unchanged on a small caps. We've talked a lot about the estimates. If you're just joining us, welcome to the program. The estimates look like this. The median estimate in our survey is 220. The high is around 280. The low is about 150 this morning.
So what's so interesting is because it's noisy because we're coming off such a low payrolls report. When you look at the strikes, you look at the hurricanes, Deutsche Bank, Citigroup, they expect a return for some of these jobs in October, 80,000 of new jobs created. Bank of America a little bit higher. They say that payback's 100,000. But it's going to be interesting because also the revisions. How much of the revisions also going to play into this? And then to everyone's point, what does this mean for the Fed? Especially as we know they want to keep their optionality. They're not in a hurry, what we heard from Jay Powell in his previous public statement. And then this week it was, we're going to be cautious.
For economists, that's the number one question. What does this data and next week's CPI print mean for the Federal Reserve on December 18th? Got it. I think for market participants right now, what can dent the bullishness on Wall Street? Listen to these estimates. Chris Harvey, Wells Fargo, his outlook for 25 dropped early this week, 7,007. Deutsche Bank, 7K. BMO, 6,700. Barclays, 6,600. RBC, 6,600. You get the picture. David Rosenberg, Danny, made some headlines in the last 24 hours out on X and posting the following. Those of us who have found ourselves on the wrong side of the trade must consider adopting a different strategy. The bears are falling.
To be clear, he said himself he is not throwing in the bearish towel, but he is admitting that what he thought was irrational in equity markets might not be so irrational. Things you usually hear at the top of the cycle. These valuations, maybe we can make them make sense. Both Rosenberg and BlackRock were out yesterday saying that the current valuations aren't about 2025. They're not about 2026. It's the next decade. It's the promise of AI. And so that's how you can make this make sense. Again, these are the kind of arguments you tend to hear when things are near the top.
And Lauren Calvasina on earlier said we potentially, though, could see a pullback from where we're seeing right now. I'm stunned at the front page of the FT this morning. Investors have pumped almost $140 billion into U.S. equity funds since last month's election. Basically, an entire month. We're looking at $150 billion going into the market.
And that's all happening at a time where you have Rosenberg throwing in the towel. And by the way, Rubini sounding remarkably positive on this program yesterday. I think that's frightened a few people, but look,
Not so, Dr. Gloom.
No, yes, exactly. What do you say? I'm like Dr. Realist or whatever. But it rarely works to fight the bulls. Usually it's fighting the bears that works. So it's kind of a question mark what you actually do with this.
I have to say, Nouriel sounded somewhat constructive in a conversation yesterday, which was somewhat jarring at times. Equity futures on the S&P 500 negative by 0.1%. In the bond market, yields look like this, up by almost a single basis point. The 10-year just south of 420, 418.18. Coming up this hour, we'll catch up with Priya Misra of JP Morgan as stocks lose steam near all-time highs. Former NEC Deputy Director Everett Eisenstadt on Trump trade policy. And we'll speak to Torsten Slok of Apollo as we count you down to the jobs report at 8:30 Eastern Time. We begin this hour with stocks mostly flat as traders await November payrolls, helping to shape the Fed's next policy decision. Priya Misra of JP Morgan writing, the number will see some payback from the hurricane and strikes, but I think anything below 250 suggests a loss in labor market market momentum. What can result in a pause in December? 300K plus on payrolls. Priya joins us now for more. Priya, good morning. Why is anything south of 250 weak for you?
You've got to average the last few months. I mean, you know, you look at the underlying trend in the labor market, there seems to be a slowing. But if I average the 12,000 and a 250, you're getting a slower pace of hiring. I think what we actually saw in the July and August report, there was sort of, you know, slowing, and then we had a very strong number. I think you've got to think through the underlying trend. We do see that the labor market's slowing. Nothing dangerous. That speed is not very high. We're in a soft landing. We believe it. But you start to average out the last couple of months, and if it does seem like that trend is slowing, I think that's why the Fed is saying that monetary policy is still restrictive. Despite what's happening with risk assets, it's that hiring pace that I think concerns them.
Important question for the bond market. Citi's Andrew Hollenhorst. Markets are underpricing downside risk to jobs data and the Fed's asymmetrically dovish reaction function. Do you think risks are skewed asymmetrically to lower yields?
I think risk assets might be. I would say that the bond market is fair. We're pricing in, despite a little bit of hawkish rhetoric from Fed Chair that they can be cautious. I think the market's looking at whether they're going to cut in December. I think very likely. So you talk about asymmetry. I see the asymmetry a little bit in risk assets, where I think there's this optimism. We're in a soft landing. We're going to get a policy mix that's all growth positive. I'm a little cautious. I'm not so sure that the entire mix of policy between trade, fiscal, deregulation, is that all so positive growth? So I think risk assets, if you see a weaker number, there has to be a bit of a reality check that maybe there is a loss in labor momentum. The Fed can cut, but there's lags in monetary policy. And so I think risk assets might have that. I think a number below 200, I think a bigger reaction in risk assets. You get 250 or higher, I think risk assets are going to continue with that soft landing theme.
Does that suggest to you then that the data monetary policy is still in the driving seat and it's not fiscal policy and hopium for growth?
I do think that. I mean, I think with fiscal policy, people look at the 2016 move and say, well, that was a big move in rates. There was significant growth positive. I think the starting point is so different in terms of the debt, in terms of inflation. I think President-elect Trump knows that, and which is why we're talking about DOGE, we're talking about tariffs. I mean, there's a lot of boogeymen here. So I think if the market thinks about the overall policy mix, we realize there's going to be a lot of differentiation. So I think active management, you're going to have to be careful about which sectors you're long, which sectors you're not. I think interest rates actually might just stay around the same level. We're exactly at the same 10-year yield today as we were a year ago. And yet, you know, bonds have done well. It's because it's not so much about rates, it's about where are you putting your, bets on.
I wonder how much that explains the head scratcher of treasury yields being basically exactly where they were on election night, when everyone thought that you'd get this huge run up in bond yields, and that hasn't happened. Break-evens for 5-year inflation, that also hasn't moved as well. Right. What do you make of that? What's behind it?
I think a couple of things. I think if you look at the entire policy mix, again, to my earlier point, it's hard to say that it's all that growth positive. You can argue that tariffs are inflationary, and there's no way around it. Well, not if the dollar keeps strengthening, then there's a disinflationary trend there. But I would say it's stagflationary. So some aspects of the policy are stagflationary. What does actually DOGE end up? You know, we've had a lot of federal hiring. Is that going to be negative? Is that going to be not as high? So I think when you start to get into the details, it's not so obvious. So I think that's why treasury rates are where they are. The other thing is the Fed, I have to give them a lot of credit. They've talked about monetary policy being restrictive. I think they're setting the stage for a slower pace, which makes sense. The first 100 basis points was always easy. I'm struggling 6 months from now, and they've got a few more. Now we're going to get into, are we restrictive? What's neutral? So they're telling us that as we approach, which I think 3.5, if that's neutral, they're going to slow down that pace. But they've been, I think, very consistent that monetary policy is restrictive. So that's why when the rates investors see the 10-year, I think it's attractive. I mean, I think it's fair. 4 to 4.5 is a very fair range. We could stay here and still get value from bonds. You can own 6-7% in high-quality bonds here.
Given the different policies, can we stay in this range if we say we get the good stuff, tax cuts, but we also get maybe some of the unhelpful things to financial markets like tariffs?
Right. I think we're going to be volatile. I think we're going to go, number one, I'd say soft landings are rare. So that's why this year we've moved from recession, soft landing, re-acceleration. I think that continues to happen. Why I think the 10-year stays where it is because it's going to depend a lot on sequencing. Do we get one policy, do we get tariffs first because that's an executive order issue? And do we have to wait for fiscal for end of next year or maybe 2026? So I think sequencing will matter where we are in that range. But I think if we get all of what has been talked about, it's not so clear that it means much higher deficits or much stronger growth. So I do think rates stay where we are. We're going to look at monetary policy. Where does the Fed really start to slow down? I don't think we're there yet. We could get there in 6 months. And it's going to come down to the data and how different sectors are responding to the policy.
Everyone comes on and says the sequencing matters so much. Do you have a base case?
We do. I think some part of tariffs are announced early on, maybe right on Inauguration Day. I do think it's an opening salvo. I mean, we talk about the Fed put, but there's a Trump put that I think the market's thinking about, that do we start with 60? Maybe not for the whole world, or 20 for the whole world. That's going to matter. If it starts with, hey, let's talk about renegotiating trade deals, and that might be all of next year, or maybe 2 years of renegotiating, I think the market's taking some comfort. And I can see that you don't start off with, this is what I'm going to do, let's talk about it. I do think you'll probably get tariffs early on, and then we spend all year debating how much are they cutting in terms of fraud and waste, how much are they cutting in terms of spending, and then what's the tax offset that you're going to get. So I do think, yeah, what can be done without Congress happens earlier.
Is the Trump put in the equity market or the bond market?
I think more the equity market, because I do think President Trump probably looks at the equity market more as a scorecard. But I think we all understand, I think even equity people understand, the bond market matters. It mattered a little over a year ago. In October of last year, we got close to 5%. People who normally don't care about bonds don't talk to me.
Starting to care about bonds.
What's happening about bonds?
Started to watch auctions, Priya. I noticed that as well. Can we finish on the front end of the curve?
Sure.
I don't want to make a big deal of 70 basis points or so, but you talked about a neutral rate, the Federal Reserve being something closer to 3.50, 3%. This 2 years kind of stuck at 4.10, 4.20. And I just wonder if that's the market's way of telling the Fed, this is where we think neutral is. This is where we think the landing point is for this cutting cycle over the next year or so.
I think that's fair. That's the market. But the market changes that view of neutral a lot. Because, to be honest, we're all going to figure out what is neutral after we've crossed it. So I think, which is why if you start to see inflation level out, and inflation's been a little bit hot. I know the Fed's confidence is still there, but that CPI report next week is important. If you see another hot print, I think the market's going to say, we don't believe that neutral is 3. It's higher. So inflation might be a little more important. But you get payrolls today, and we realize, oh, there is that underlying loss of momentum. The market expectation of neutral will go down. So I think, not to give you a cop-out answer, that it depends on the data, but I think that market estimate will be dependent on both inflation and...
It's a fair response. Let's put it that way. Priya, you're one of the best. It's good to see you. Thank
Likewise.
you. Priya Mishra there of JP Morgan. Bond yields this morning at the front end higher by around 2 basis points. With an update on stories elsewhere with your Bloomberg brief, here's Yahara Heckes. Hey, Yahara.
Hi, John. Authorities are still looking for the suspect in the shooting of Brian Thompson, the United Healthcare CEO killed in New York earlier this week. Bullet casings found at the scene were inscribed with the words delay and depose. Police say the gunman arrived in Manhattan on November 29th at Port Authority and used the fake New Jersey ID to book a hostel. Thompson's wife told NBC he had received some past threats, potentially related to insurance denials. Meanwhile, President-elect Donald Trump selecting another key appointee. Trump has named former Georgia Senator David Perdue as ambassador to China. Perdue is a former businessman who has worked in both Singapore and Hong Kong. The pick comes as Trump has threatened tariffs on China by as much as 60% before threatening an additional 10% if Beijing fails to stop the flow of fentanyl into the U.S. And look at shares of Lululemon. Those are at more than 9% in the pre-market. The athleisure company raising its full-year outlook due to strong sales overseas, despite slower growth in the U.S. Lululemon's strategic plan is now targeting annual revenue of $12.5 billion by 2026. Lulu is saying it will be fueled by rapid growth internationally, a focus on online sales, and a larger product offering for men. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara a little bit later. That stock is absolutely flying. Up next on the program, big expectations for the incoming Trump administration.
Our expectation heading into the Trump administration, or heading into the possibility of a Trump win, was always that the good news would be kind of front-loaded, and then the more potentially adverse news is back-loaded.
That conversation up next, live from New York this morning. Good morning.
politics to the world of business. Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
So in a little more than an hour, we'll get the jobs data. It's just around the corner. We're looking for about 220K on a headline basis in our survey. Going into that, these are your scores. Equities a bit softer, down 1/10%. No drama here. Really treading water across the board, both in foreign exchange and in the bond market as well. Bonds unchanged, your 10-year 417.61. Other surveillance this morning, big expectations for the incoming Trump administration.
Our expectation heading into the Trump administration, or heading into the possibility of a Trump win, was always that the good news would be kind of front-loaded on some of those priorities like deregulation that were very clear, and then the more potentially adverse news is backloaded in terms of what happens with tariffs, what happens with some of these offsets for a fiscal package next year, where we're going to need to wait to see where these risks land.
So here's the latest this morning. Donald Trump's election victory pushing U.S. business sentiment to multi-year highs. Investors expecting looser regulation and a tougher stance on trade. Former National Economic Council Deputy Director Everett Eisenstadt writing, business and governments around the world should expect and be prepared for a drastically changed landscape in the years ahead relating to trade and international trade policy. Everett joins us now for more. Everett, welcome to the program, sir. I've been looking forward to this conversation with you this morning. How different will the approach be this time around compared to the first time around?
Well, thank you, Jonathan. It's a real pleasure for me to be here. I think we're going to see a significant difference. The first term, there was a kind of a walk into a tariff conversation. We started with some existing safeguards on washing machines that led to the 232 aluminum and steel tariffs. And then finally the big China tariffs, which are under the 301, which are still in place and were actually carried through under President Biden and actually enhanced. But what's interesting about that debate is that there was an internal dialogue about whether tariffs were a tool or an outcome. And what I mean by that is tariffs can be a very powerful tool to effectuate change, or they can be the end state in of themselves. And some people believe that, a strong tariff regime enables, domestic manufacturing, it solves the trade deficit. And those are the kind of debates we were having. That's not where we are today. It's definitely a tool and an outcome in a sense. And so what people are trying to discern now is like, well, what is that tool going to be used for, and how long are these tariffs going to stay in place? And there's a lot of different scenarios, and we're looking at different scenario plannings, but it's much more complex and I think much more advanced, which I think will lead to greater durability for a new type of trade regime that we haven't seen for quite some time.
Everett, though, is the bias towards using them as a negotiating tool, or are you expecting blanket tariffs and double digits when it comes to China and the rest of the world?
I think we could see both, and I think we can see both in different times on different countries. The president has been pretty clear that he is very committed to utilizing tariffs to change a lot of the inequities that he sees in the world. He has particular markets that he's quite concerned about, and he has said and he campaigned on a 10 to 20% universal tariff. I would be surprised if there wasn't some early manifestation of that tariff in his administration. Now, whether that tariff is put into place and then over time negotiated away, that's a very likely outcome. But he's pretty consistent in doing what he says he's going to do, and he has committed to using broad universal tariffs. He's also shown that he is going to use tariffs for the U.S.-China relationship, and that's on top of the existing tariffs we have today. So I would expect more tariffs on China. I would expect them fairly early, and I would not expect them to go away as readily, candidly. So there's going to be a lot of moving pieces. And then, of course, you saw over this past weekend with Mexico and Canada, tariffs were used for a very specific purpose, targeted towards migration, fentanyl, and border security, and then also the BRICS dollar threat. So, there's a lot of moving pieces out there. It's going to be quite complex, but I think at the end of the day, when we're through this administration, we're going to have quite a different approach on international trade than we've had for quite some time.
What's also different in Trump 2.0 is the personnel. Ambassador Lighthizer is not, at least thus far, going into this administration. There's going to be individuals like Howard Lutnick, Peter Navarro, Jamieson Greer. How do you expect these different individuals to use the jurisdiction they have, whether it's 301, 232, or just being very close to the president?
Well, I think the last thing you said is absolutely critical. He's been very careful in selecting individuals who are quite loyal to him. And everybody you see on that, Kevin, all the way from Howard and Jameson, they've all been very loyal, either through the campaign or in the prior administration. They have different approaches to tariffs. They have different statutory authorities. And so it's going to ebb and flow depending on what the tool being used is and what the objective is. So, for example, just to remind people, Jameson is a protege of Ambassador Lighthizer. He's worked with him. He was part of his team. He knows how to operate. He's a very good trade lawyer. And he's going to use his statutory authority to try to achieve the outcomes on behalf of the president. Howard Lutnick has a different group of authorities. He has a different position. He's also got a broader mandate beyond tariffs. But he has more of the defensive AD/CVD, which is the dumping and anti-countervailing duties authorities. They'll be used as well. So I think they'll all play a role. You'll also have, of course, there'll be a focus on Wall Street and how does Wall Street react, because there is a concern, and he does want to maintain a very strong and vibrant economy. So that's where, some of the other voices come in. So I think it'll be like we had in the past, a cacophony of voices at the table with him being the ultimate decision maker.
For now, Wall Street hasn't really reacted, or if it has reacted, it's been in a positive way. Everett, I'm curious about the business community. You say real changes are coming. Have they started to try to make those changes? Are companies trying yet to right-size their supply chains, get domestic supply chains? And if not, are they already behind?
It is such a great question. It is all over the map. I mean, you have some companies that are quite exposed to China. Candidly, it's hard to move away from China because it's a very vibrant market. You've got good, rates. It's an efficient economy, and there's a lot of capital investment there. So it really is very industry specific. We've been seeing across the board, there's some bifurcation of markets now. I think if you're in a highly regulated industry, say pharmaceuticals or another where there's a lot of scrutiny on supply chains, you may see more bifurcation of markets in research and development, which is quite a significant change. But I think the companies that are paying attention should be planning now, because these actions can begin to take place as early as January 20th. We can see some executive orders. And one thing that we constantly remind clients is that it's not just what it does to your supply chain, it's what it does to the perception of your governance structure. And have you prepared a contingency plan to demonstrate to markets that you're prepared for shocks and that you understand that there may be shocks? That doesn't mean they're going to come, but if they do come, you've got the structure and the plan in place to react. I think that's very important because there will be a lot of unpredictability in this next cycle, and having those plans in place and being able to talk about it when the actions happen can be very, very impactful, both to markets, but also in helping to manage the company on a day-to-day basis.
Well, Everett, on the idea that it's been uneven of how businesses are preparing, I was talking to one private equity executive who was looking at a business that had supply chains in Canada and said, hey, I still like this business because they have the ability to raise prices. Consumers will still buy these goods. There's more flexibility. It's a strong consumer. I just wonder, both for companies and politically, when does that narrative run out? We already learned that this is an American populace that's willing to turn on the government if they have to pay higher prices.
Absolutely. And it is such a diffuse effect that is hard to say. I think for some companies, it's going to be very price sensitive. They have low margins. They don't have a lot of optionality. You can take textile or apparel that's produced and you can't raise those prices very high in some of those markets because it's very price sensitive. There's other products where people will continue to pay. They may not have the choice, or they'll so it really depends. I mean, we're seeing in the auto sector, for example, that, purchasing of vehicles is down because autos are expensive. If they become more expensive, that may affect the auto market more. So we're watching that very, very closely.
Hey, Everett, it's good to hear from you, sir. Let's do this again. This was smart. Former National Economic Council Deputy Director Everett Eisenstadt. It's far more complicated this time around because it crosses so many different